Welcome to our special coverage of the 2024 presidential election. I'm Julie Hyman alongside Shauna Smith.
Former President Donald Trump winning a second term in office, becoming the 47th president of the United States. He is the first in over a century to win back the White House after losing it. Before the race was called, Trump spoke to his supporters in Palm Beach, addressing priorities for a second term.
The task before us will not be easy, but I will bring every ounce of energy, spirit, and fight that I have in my soul to the job that you've entrusted to me. We will make America safe, strong, prosperous, powerful, and free again. It's time to put the divisions of the past 4 years behind us. It's time to unite.
We will bring you the latest updates along with the implications for the market, the economy, and your portfolio as futures point to a strong rally at the open. Dow futures up more than 1,300 points.
Plus, we'll hone in on the balance of power in the United States as Republicans take control of the Senate, with many fiercely competitive U.S. House races still waiting to be called. Democrats need just 4 seats to win a slim majority that would provide a check on Trump's policy ambitions.
And we will have full team coverage throughout the day here on Yahoo Finance. We will go live on the ground to the Nasdaq and the New York Stock Exchange, where our very own Brian Sazi and Jared Blickery are closely watching the market's reaction. Plus, our capital gains team is here in New York City with ongoing election coverage. Donald Trump's victory leading to some major swings in the markets here early this morning, Julie. And as we take a look at the major averages and some of the gains that we're seeing across the board, we just mentioned the huge jump that we're seeing in the Dow, up just about 1,300 ahead of the open. The S&P futures also moving to the upside, Nasdaq futures moving to the upside. We've seen this return to no surprise of the Trump trade, given the results that we've gotten at last night. And it looks like, at least the early look here, Wall Street very much in this risk-on mode.
Yeah, although it is by no means clear what the effect of this second Trump presidency will be. We know what former President Trump and now President-elect Trump has promised on the campaign trail, what he's talked a lot about. So let's go through those policy sort of priorities that he has laid out. First of all, of course, there is the assumption that there will be an extension of the tax cuts that he put in place in 2017. On the corporate side, that is broadly viewed as potential good news for the street. The tariffs, however, are a much more mixed picture, talking about what he's floated, 60% tariffs on China, 10 to 20% universal tariffs. But Shauna, there's a little bit of debate about whether those will actually go into effect, whether they're a bargaining tool, and then whether they will actually be inflationary, as many economists think.
Yeah, exactly. And I think we're also seeing that reflected in the markets this morning. We had the huge push higher in yields. We had the run up in gold. Some of these risk-off trades here, just as we try to gauge what exactly this is going to mean for the markets. But like you point out, many of these promises have been made on the campaign trail. It's very uncertain just in terms of what will actually go into effect, what policies he's going to prioritize, and how quickly in his second term.
And then there is, of course, the independence of the Federal Reserve, which is something that President-elect Trump has questioned as well. That's something that Krishna Guha of Evercore ISI this morning called a wild card. Mm-hmm. And then finally, immigration. Of course, he has talked about mass deportation, which could have an effect on low-cost labor in a big way in this country. Let's turn now to the market reaction, get more details, dig into what we're seeing on the heel of the results. Our executive editor, Brian Sazi, live at the NASDAQ. We've got our Jared Blickery live from the New York Stock Exchange. Brian, let's start with you.
Julie, you really make a good point there. The market, of course, is a forward-looking mechanism, and it's going to move quick to price in some of the things you just showed on that board. But it's important to note, we're not getting tax cuts tomorrow. We're not getting it into the weekend. So I think investors have to just chill out a little bit here. I appreciate their focus on the forward-looking mechanism, and tax cuts means potentially higher corporate profits. But just take these things with a grain of salt initially. You tend to see wild market moves moments after the election. But really, 3 things I'm really focused in on here, guys. First, Tesla shares. This is the most popular ticker page on the Yahoo Finance platform thus far. You're seeing shares up about 13% pre-market. Those gains have been strong really all morning long. I think the market is, based on actually what I'm seeing here or what I'm hearing from on the street, the two-pronged move in Tesla here. One, might see a reduced amount of EV tax credits. That could hurt Ford and General Motors, benefit Tesla because it's making EVs at scale. And number 2, Musk, who has been, of course, a supporter of the Trump campaign, comes out here and gets more autonomous measures approved, and they pull in more money from full self-driving. that explains the move in Tesla. Also watching, you guys mentioned Treasury yields, seeing them push higher as well. Focus, I think, on tariffs potentially getting pushed through, more inflation, maybe less rate cuts from the Federal Reserve. And last but not least, a couple random moves that caught my attention here. Solar stocks like First Solar getting absolutely crushed, as the thinking is Trump rolls back a lot of green initiatives by the Biden administration. And by extension, you're seeing shares of Exxon pop higher here. Of course, President Trump, a longtime fan of drill, baby, drill.
Indeed, Saz. Thank you very much. A lot of ripple effects here, and that's just some of them. Jared Blickery, there at the New York Stock Exchange, also has a look at some of the other ripple effects we're seeing in the market. Jared?
That's right, Julie, and I brought along the Wi-Fi Interactive, so let's dial that up as well. First, I'm just going to start with the overall market. Stock futures are ripping higher. I was writing about in the morning brief that this is a time for cyclicals. There could be a wave of corporate spending to be unleashed. And just check out what's happening with the Russell 2000, up 6%. That is just an incredible move, and it just shows you what some of the fringier parts of the market, how they're reacting to this Trump presidency win. And just take a look at cryptocurrency. Speaking of kind of fringish markets, this is the ultimate risk expression. Bitcoin has been leading a lot of the other risk markets when we've seen developments with the presidential race. Here's Bitcoin up 7.8% to a record high, finally 74,195. It's been a long time coming. Here is a 5-year chart. We just had this nice flag in consolidation. We have broken to the upside, but check out the winner here. The real winner might be Dogecoin, up 17%. Just check out this 2-year chart where it is up, matching the high that we saw earlier in the year. Then you take a look at crypto stocks. It is a similar story. I'm going to put some overnight quotes on so you can see. There's Hive up 16%, Coinbase up 12%, Robinhood up 12%. And I'm just going to close by showing you what's going on with the US dollar, because the US dollar is ripping higher. And normally risk markets don't like this, but they like it when the economy is good. And I think this is an expression that there's some forward hope for the economy right here. So strong dollar, strong cryptocurrency, put it all together, just risk on, guys.
All right, we'll see whether or not these gains hold. Jared Blickery, thank you so much for breaking that down for us. Let's get more on today's market reaction to the 2024 election results. For that, we have Steve Sosnick joining us here on set, Interactive Brokers Chief Strategist. Steve, we just had a great rundown from Sazi and from Jared Blickery down at the New York Stock Exchange, just about some of the action that we're seeing. Clearly a risk-on mentality that we're seeing play out on Wall Street. When you take a look at the sizes of the gains today, given the uncertainty, is the market a little bit ahead of itself?
To some extent, that's certainly a concern. Although one of the things that I basically put out on Monday was that the market hadn't voted yet. Mm-hmm. And I think it started to vote yesterday and certainly voted overnight. And so I think this is the reaction. We really hadn't, except for the prediction markets, which had been trending toward the president-elect now, all along, we really didn't see much of a market reaction in either direction. And so this is sort of, once it became apparent, all those trades rushed into play at once.
So, writ large, why? Right? Why is the market, the broad market reaction so positive to the idea of a Trump presidency? Is it mostly the tax cuts that the market likes?
I do think it's tax cuts. I think there was a little bit of a fear that if Harris had won, then the Trump tax cuts of 2017 might not have been extended. And so therefore you might have actually seen a little bit of tax gain selling before the end of the year instead of the usual tax loss selling, because some people might have been afraid that the capital gains rate would go up and therefore try to beat that tax rise. That's off the table now. I think just in general, there is the perception that markets like Republican administrations, although certainly the evidence for the past few years of the Democratic administration has not exactly been shabby. Markets, I think, really basically like whoever's in power. And I do think some of it is predicated on the fact that perhaps the market's thinking that maybe we have a little bit of a split here, because markets do tend to prefer splits in the long run rather than one party holding all the levers of power. I'll leave that one to some of the others to debate.
Steve, when you take a look at specifically at the move in yields here this morning, the bonds under pressure are seeing this massive uptick in yields. At what point does this become problematic for the Fed? Or I guess, and how much does this complicate not only what's going to happen later this week, obviously, but looking ahead into 2025 and taking into account the tariff policies?
I think the Fed's got a real job ahead of themselves here, because the Fed, Chairman Powell is always very clear: we don't control fiscal policy, we don't control tax policy. but now you're facing this big unknown. I think it would be strange, if not, I think it would be so out of character for the Fed not to cut rates tomorrow, because they've telegraphed like crazy the idea that 25 basis points is coming. The question will be, how do they go forward? One of the things to keep in mind is since the last Fed meeting, when they cut rates 50 basis points, the Fed funds futures a year out are basically 1 full percentage point higher. So the market has backed off a lot of it because, quite frankly, we have a strong economy. We have some wage pressures out of the labor market. This, depending on what policies are implied here from the new administration, that could actually raise the cost of labor, which is probably why a lot of people voted for him, but that doesn't help on the inflation front. Mm-hmm. So the Fed has a very tricky job ahead of them. They may do the 50 basis points, another 25 basis points in December, just because, again, that's somewhat baked in. Although I really want to hear what the chairman has to say tomorrow in his press conference. Does he start to back off that? Does he reflect the uncertainty?
Right, Steve, got to leave it there. Good to see you. Thanks for coming in.
My pleasure.
Well, Donald Trump secures a second term in the White House, becoming the 47th president of the United States. To discuss this historic win and the potential role Elon Musk could play in the new administration, Rick Newman is here with us on set. So, Rick, what can we realistically expect?
A lot of it depends on what happens with the House. We don't know who controls the House yet. Some analysts are giving the House, the Democrats, a slight edge in the House. That's hugely important because it's the difference between Trump being able to pass any legislation that Republicans want to pass and Democrats basically being able to block. But we know there are a lot of things that Trump can do without Congress, and the number one focus I guess today the number one focus is interest rates and the expectation of lower taxes, or at least not a tax hike, which is why markets look like they're going to have a pretty awesome day. But we're going to start talking about tariffs very soon, and most people following Trump think, number one, he can do this without Congress, because we know he did, because he did that during his first term. And he has indicated that he is going to do, this is going to be like a first day priority. They're going to get started on this right away. So these could be going into effect in, let's say, second quarter, third quarter of 2025. One of the first things that Trump and his advisors have signaled they will do is they will declare that China is out of compliance with the, I mean, we're going back to, tariff history and Trump won here, but that China is out of compliance with the trade deal his administration made with China back then, which the Biden administration has not really enforced at all. And Biden, of course, did repeal a bunch of tariffs that were not placed on China. He repealed tariffs on Europe, for example. Trump wants to put those tariffs back on. And, and by the way, he wants those tariffs to be higher than they were the first time around. And he learned, and Robert Lighthizer, who's his tariff man, who's going to be back in this next administration, they learned how to do this the first time, and they're going to do it probably a lot quicker and a lot more aggressively the next time around.
Is that the case across the board when it comes to the policy initiatives, just given the fact it's 4 years instead of 8? He's focused on?
It's well, again, it depends what can Trump do by himself. But the other one that we're talking about is deportation. So I mean, I guess the three that I would say, deporting all the migrants. He wants to deport migrants, more migrants than there probably are in the United States. So he tried to do that too during his first term. One of the things the analysts say is the tells are who he's going to appoint for key jobs. Now those people are going to, cabinet secretaries are going to have to get confirmed by the Senate, but the Republicans are going to control the Senate. So the question is, how much leeway are they going to give Trump there? And the third thing that's on my mind is he also said he would resolve Russia's invasion of Ukraine in one day. Nobody thinks that he can really do that, but he definitely can change U.S. policy with regard to weapons provided for Ukraine. He probably will not seek any additional aid from Congress. So in a way, the biggest losers of Trump's victory are Ukrainians.
All right, Rick, always great to get your insight. Thanks so much for joining us here on set. We'll speak to you again in just a little bit. Let's take a look again at bond yields surging this morning as investors react to Donald Trump winning a second presidential term. We want to bring in Douglas Holtz-Aiken. He served as director of the Congressional Budget Office from 2003 until 2005, and he is the current president of the American Action Forum, a conservative think tank. Douglas, it's great to have you here. on Yahoo Finance with us. So I think when you take a look at the market's reaction this morning, very much they are viewing Trump's policies as pro-economic growth. I'm curious, how do you see this playing out under a second Trump term?
Well, certainly the most striking difference between the Biden administration and what probably would have been the Harris administration and Mr. Trump is in the regulatory area. The Biden administration has imposed $1.7 trillion of costs on the private sector in not yet 4 years. That's double what Obama did in 8 years. During his 4 years as president, Donald Trump imposed $40 billion of regulatory costs. So it's just night and day different on the regulatory front. There's no reason to believe that that'll be any different the next time around. I think that was a key part of the surge that we saw in 2017. The small business sector optimism went up dramatically. I think you're seeing that again today. And then, we know the other pieces, the unambiguous good news of extending the tax cuts, perhaps getting lower corporate rate as well. And then the question of what happens on the tariff front, which is a headwind to growth, and people try to sort out how big an impact that's going to have.
Well, how do you sort it out, Doug? I mean, I guess it's too soon to tell because we don't know what he's actually going to impose. There's been some talk, well, maybe it's just going to be a negotiating chip. It wasn't that the first time. So how do you then, as an economist, try to sort of weigh those different elements?
Well, I think the first step is to try to understand who controls the House, which is still up in the air as we speak and is central to how this goes forward. If the Republicans control the House, there is the chance for them to use so-called reconciliation, these fast-track procedures that only require 50 votes in the Senate, to pass legislation. And that legislation, if it doesn't create long-term deficits, can be permanent. Unlike 2017, where everything had to sunset because it had deficit impact, if they can make it deficit neutral, they can make it permanent. Many Republicans would be attracted to the idea that, hey, we can use the $3 to $4.5 trillion of tariff revenue to offset these other tax cuts and maybe get this to deficit neutral. They might not like the tariffs in and of themselves, but it's a way to get there for their other objectives. If they don't control the House, that's off the table, and it's up to the executive branch and just how aggressive Mr. Trump is going to be. My reading of the situation is he's talked a lot about a lot of things. The ones that come first in his mind, the ones he mentions first, talks about the most, are on the immigration deportation front. Certainly the immigration border crossings will be tightened down even further. There will be attempts to change the legal immigration system to minimize immigration to the U.S. Deportation is a wild card. He promised to deport 11 million people in the 2016 race. That never transpired. We did some work back then that said it would cost $400 or $500 billion, take about 20 years. None of that played out at all. So I've got an eye on that as well.
Douglas, what about the impact that specifically is going to have on the labor market when you talk about wages, when you talk about employment numbers, and that actually turning into a challenge here for a Trump administration?
I think that's a real risk that they run. The labor market has finally cooled somewhat, but the unemployment rate is 4.1%. And this is not an economy that is overflowing with excess labor. And to cut back on the source of not just low-skilled labor, we're now seeing immigration at all skill levels, and those skills are needed in the labor force. So to cut that off and minimize it, I think is a risk that I certainly wouldn't take as a policymaker, one they're going to have to consider pretty carefully. And I'll just echo what Rick Newman said about, the Fed now has to game this out as well. What do you think about tighter labor markets? Is that a possibility? How much inflation pressure comes from the tariffs? How quickly does that happen? What does that do to their plans to move monetary policy more toward neutral? Are they stuck now with a more restrictive policy? That's a headwind to growth as well.
Doug, thank you so much for taking some time with us this morning. Appreciate it.
Thank you.
And continuing our election coverage, Yahoo Finance will be speaking with Jason Furman, former chairman of the Council of Economic Advisors under then-President Obama. That's coming up at 9:05 a.m. Eastern. Honing in now on the balance of power in the United States. Republicans now will control the Senate. The majority in the House does remain in question. Democrats need just 4 seats to win a slim majority that'll provide a check on President-elect Trump's power. Let's bring in our own Ben Werschel for more on this. I think everybody we've talked to this morning has said it's Depends on the House.
Yeah, the House. That's
What's the timing on when we might find out those races?
It could be a long time. There's over 50 seats that are still up in the air. The magic number that they have to get to, either side has to get to, is 218. So this can take a while. A lot of these are in places in like California that can count slow and there. So it could be later today, but it could be a few days from now. So we won't know that for a while. And as Rick and Doug have echoed, this is really sort of sets the agenda on a lot of issues next year.
But I'm curious what your reaction is, just in terms of what this election signals about the Democratic Party, the future of the Democratic Party, and the shift that we see while the House is still up. We don't have the results there yet, but the shift that we have seen, it seems like, at least to the right.
Yeah, I mean, I think every election the question is whether it's the weakness of the losing candidate or the strength of the winning candidate, and I think we're going to be talking about that for a long time. Is this a sort of Trump support? Is what drove this, or is it a Harris weakness that drove this? So I think it's going to be a question for a long time. There's clearly weaknesses amongst the Democratic Party right now. They counted on a lot of votes that just didn't show up for them last night. The women voters and the abortion issue is one that was supposed to be a big thing, but we didn't hear a lot about. Rick Newman and I were talking last night about trying to find a theme, anything that broke Harris's way last night or in the Democrats' way, and we couldn't really think of them. There's like 20 factors you can think of. The House could be a big one if it happens, but it's definitely a sense of the Democrats are going to have a lot of soul searching to do, for sure.
Outside of the presidential contest, when you look at the down ballot races, as well as I know you were looking at some of the measures, the other ballot measures around the country, what was the biggest surprise, do you think?
I think the down ballot, I mean, we haven't talked about the Senate yet, and that's an area that has gone even more Republican, to the point about sort of Democratic weakness, that's gone even harder than we'd expected. A big race that's sort of vivid there is Sherrod Brown in Ohio, who is a big figure in banking because he has the chair of the Senate Banking Committee. He lost his race, and the Democrats are going to lose the Senate Banking Committee control of that with the whole Senate. So that's sort of an area which is strength. And I think Republicans have 52 seats now, and there's still 6 undecided, so they could have 53, 54 seats, and there's a lot of implications there, because then that means moderates like Olympia Snowe or Susan Collins have less leverage. So they can vote against a bill, but Trump can still get it through. That matters for his nominees and things like that. So that's an area where the implications of the Senate could be really vast.
Great point. All right, Ben, thanks so much.
Mm-hmm.
Well, coming up, we've got a special election edition of Opening Bid. Our executive editor, Brian Sazi, sitting down with a team of Wall Street pros to discuss the 2024 election and the future of U.S.-China relations. That's next when Yahoo Finance's election coverage returns.
Are you ready to master the markets and, dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Now let's make some money and get a lot smarter.
I've done Yahoo Finance forever. This is a spectacular spot.
Welcome to Stocks in Translation. I'm your host, Jared Blickery.
Hello, world. I'm Ross Mack.
Hi, I'm Bob Powell, and welcome to Decoding Retirement.
Welcome to Living Not So Fabulously.
Hey, it's me, Tiffany the Budgetista, your favorite financial educator. Welcome to Capital Gains World. For a few days and everything has changed.
From Wall Street to Main Street to the C-suite, we are your daily lifeline, because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts. That's cool, guys. Welcome back to Yahoo Finance. Look, usually this is a taped podcast called Opening Bid. I start every podcast saying this is the podcast that will make you a smarter investor. But today we're live from the market site the day after the big presidential election. Of course, Donald Trump elected the 47th president of the United States. And for this podcast, I just have to say, let's get after it. 3 awesome guests here. Also, I'm going to put out some really interesting context on what we did see with stocks. We have Maria Vittman, State Street Global Markets Head of Equity Research. We have Bill Blaine, Windshift Capital founder and friend of the show, Keith Lerner, Co-Chief Investment Officer and Chief Market Strategist at Truist. All right, guys, in the spirit of getting after it, Keith, let me start with you. Major move here in the early going for markets. Simple question. Is it too much? Is it too soon?
Oh, first, Brian, excited to be with you. Finally, the election is passed, at least the day. I don't know that it's too much too soon. I mean, if you think about it, coming into this, there was a real contentious between, the outcome, and it was 50-50. So once you gain some clarity, and it looks like this won't extend or be a contested election, there's a relief rally. And if we just use 2016 as an example, realizing that was a different period, you did have a pretty good reaction right away, and then it lasted for over the next month. I will say, though, what it appears is that the market initially is focused on all the potential positives of a Trump candidacy as far as lower regulations, lower taxes, and not really focused on some of the counterbalances, which could be the tariffs, maybe the Fed moving a little bit slower. And we still have uncertainty around the House. So again, I think the underlying trend for this market is still positive, Brian, but there are some things as we move past this that will likely cause some more swings in the market, not just one directionally.
Bill, let me get over to you because I know you've been on opening bid before. You're a no-nonsense guy. What are some of the potential negatives? We're seeing the market really fly to a lot of positives, potential positives of a Trump presidency. What are the negatives that you see that investors need to keep in mind?
Okay, well, the big negative for me is I'm across here in Georgetown this morning. I came over to watch the election last night and joined some friends, and really very interesting to watch, but I'm paying the consequences of too many flights too quickly. I'd agree completely what we've got going on just now is a relief rally. I think once the market settles, they're going to figure out that, okay, we're going to have to rethink treasuries. I then think we need to think about the wider geopolitical issues. And that's one thing I really haven't heard much about during the election. What's going to happen in terms of where the US remains as global hegemon in the global economy and whether it chooses to be so. So let's see what happens with Ukraine. Let's see what the noise around that is. Let's also see how Europe and the allies react to Trump's victory. I think that we'll very quickly gather around him and seek to build positive links. And I don't think we need to panic too much about the de-dollarization trade. However, I do think there'll be a lot of pushback globally on some of the things that will change in the US economy, such as the deregulation of crypto, deregulation of the banks not joining in the next version of Basel, and also what happens with tech. As for the tariffs, if that goes ahead, I think that's going to cause an enormous amount of international pushback on the US and will possibly create more problems than it can possibly solve.
Maria, let me get you in here. Of course, you have that really great global perspective. I mean, is this a market that needs to take a breather here today? And maybe they should be a little panicky about Trump in his first 100 days coming out here and slapping the world with all sorts of tariffs.
Yeah, hello. Actually, I'm going to be probably more constructive, more positive, and looking from abroad. I mean, it looks quite clear that U.S. will continue to maintain its exceptionalism, particularly U.S. markets. So, like U.S. stocks clearly winner here, and Europe and emerging markets and Asia look kind of on the downside. So U.S. stocks look more positive for us. And tech sector still, I mean, I've been big fan of tech sector, and the biggest risk for tech sector was regulation. If Democratic candidate wins or get Democratic sweep, and that's not what we're getting. So U.S. stocks look attractive relative to the rest of the world, and within U.S. we still see tech having lots of potential. So really, ironically, you probably have your U.S. tech stocks as being a safe haven here.
I want to try to go around the horn, zeroing in, I think, on some of your individual areas of expertise. Keith, let me go to you. Big Federal Reserve meeting coming up right now, and now President Trump has not hidden, or President-elect Trump, I should say, has not hidden his distaste for Federal Reserve Chief Jerome Powell. But is it important that Powell keeps his job to see through the rate-cutting cycle he now just started? And what's the risk to the markets if Powell's not atop the Fed?
Well, I don't think there's a large risk that he is going to be moving anywhere soon. Like his term is not over. I believe it's 2026. So I don't think it's a near-term concern beyond that you'll just hear more rhetoric. And I think that's the way to think about it. As we learned from the last Trump term, we have more day-to-day rhetoric, and for what we do our jobs day-to-day, we'll be writing more because there'll be different things that come out. And we have to kind of decipher what is noise and what's a negotiation ploy. But I think even this week, what's interesting is the Fed's important, but it's probably not as important as it has been. Market's still pricing in above 90% chance of a rate cut. I think what happens really is more about the policies that Trump has, and what does that mean for growth? What does it mean for inflation? And interest rates we're seeing on the move today as well. And if we look at all this together, it likely means whatever the path before the Fed was before, they're probably going to move a little bit slower if we have a little bit stronger growth, a little bit more inflationary. But overall, I would prefer an economy that's strong, that supports earnings, to an economy that needs more rate cuts because it's weakening.
Bill, you're my Tesla guy. We talked about Tesla the last time you were on. Shares up about 13% here in the pre-market. What do you think happens to Tesla? Look, I mean, it's likely not the Musk joins the government. He has companies around, SpaceX, Tesla, but the market is thinking that he's going to be able to influence Trump. Suddenly the world's going to be filled with driverless cars, and Tesla's earnings are going to triple over the next 5 years. Tell me why I'm wrong.
Oh, geez. Well, that's a tough one. Just come back very quickly on the issue of treasuries, though, because I think that's going to be a great source of frustration to Trump, because we are going to be heading into a very inflationary environment. Global supply chains are not fixed. And if he imposes tariffs, that's going to push up inflation. Going on to Tesla, well, you know what? Tesla was one of the shorts that I was proposing if Harris had won last week. I did put out a thing saying that I thought Harris was likely to win, and that was a contrarian trade against the general expectation of a Trump win. Clearly, that's not going to happen now. Tesla has taken this boost this morning. And I suppose that kind of goes with the whole narrative about Tesla. It's all about Musk and what Musk's going to get. And if Musk does get this role as, Doggy, Department of Government Efficiency, and the first thing he does is deregulate the whole thing about self-driving, then that is finally going to be something you can say is really different and valuable about Tesla. But I suspect that this is probably boosterism, and it's not going to be long term. I think, though, there are some fantastic things that could well happen for Musk in a new government. And one of the things I sort of jokingly commented about last week, imagining Trump's second year, is that Tesla and Musk comes in with his undoubted skills and rescues the ailing Boeing, joins it with SpaceX, and creates something new and really exciting. Hey, so there you go, something positive about Tesla.
We'll circle back on that, Bill. Last minute to you here, Maria. Buy or sell the Mag 7?
Oh, definitely buy. Absolutely, 100%. I mean, that's pretty much the only area which still has strong earnings growth anywhere in the world. So definitely buy that.
So you think the earnings power of the Mag 7 will be stronger under President Trump?
I mean, I just don't see earnings power anywhere else in the world. So in a world where money are coming to equities, tech looks spectacularly better than anything else. Absolutely.
Great analysis, guys. A little bit of everything here on the Opening Bid podcast. Bill, we're going to circle back on that Tesla call. I mean, let's take that offline, as they say in our industry. Maria Vittman, State Street Global Markets, Head of Equity Research. Bill Blaine, Windshift Capital Founder, and Keith Lerner, Co-Chief Investment Officer, Chief Market Strategist at Truist. Thank you. This is a very busy day. Thank you for joining a live episode of Opening Bid. We'll be right back on Yahoo Finance with much more analysis on all things the day after the election.
Welcome to Yahoo Finance Sports Report, a unique look at sports business brought to you by Yahoo Finance and Yahoo Sports. I'm your host, Joe Pompliano, and I'll be breaking down the financial side of the game for your financial gain. We'll go beyond the headlines, analyzing all the latest sports news, the teams, the trades, and billion-dollar deals, so you and your portfolio will win big. Catch Yahoo Finance Sports Report on Thursdays on all your favorite podcasts and streaming platforms.
Are you a passionate investing bull? Maybe you love scooping up shares of NVIDIA on every single dip because, well, AI is changing the game. Fascinated by PE ratios and how the presidential election outcome may impact them? Then come one and come all to the 2024 Invest Conference. Huge power players all under one roof. Thought-provoking discussions on November 12th at Second in New York City. We can't wait to welcome you to Invest 2024 live at Yahoo Finance all day.
American voters electing Donald Trump as president, President-elect Trump winning important swing states in a shift from what we saw in 2020. Joining us now, we have Andrew Romano. He is a Yahoo News political reporter. And Andrew, you wrote about some of your key takeaways from election night, and one of those being the fact that Trump appears much stronger than he was 4 years ago. Where did we see him make up the most ground?
Yeah, there are a couple places. Well, first of all, I think one striking example of how much stronger he is now than he was 4 years ago are his performances in states that you didn't really expect him to overperform in, right? Places like New York, New Jersey, where I'm from, he did better than any Republican in decades. In Florida, he quintupled, his margin of victory over Joe Biden in this race against Kamala Harris. He won by 13 percentage points. So he's running up these margins in states like Florida. He's cutting into the margins in Democratic states like New York and New Jersey. Illinois, I think we saw overnight as well. And that's because of some shifts we've seen demographically and geographically among voters.
Talk to us more about that. What do we know right now as to who voted for him, especially the people who voted for him in greater numbers than they did before?
Yeah. So geographically, Kamala Harris did about as well as Joe Biden did in urban areas. She did slightly worse, potentially, in suburban areas. And this is all based on early exit polls, so we have to caveat that these numbers are going to shift a little bit. But you can say directionally where there were changes. But the big shift we saw was Trump running up his margin among rural voters. He improved that by 5, 6, 7 percentage points. And these are counties all across swing states like Georgia, North Carolina, where he just built up a rural firewall. 100 votes here, 1,000 votes there. And it was very, very hard for Harris to perform well enough in those late-breaking urban counties and metropolitan areas to overcome that. So that's geographically one area. And then the biggest demographic, again, from the exit polls, so it needs to be caveated, is the shift among Latino voters. Donald Trump did significantly better than any Republican since George W. Bush among Latino voters. If the exit polls are to be believed, he could have won 45% of them. That's up from 32% just 4 years ago. And that is based mostly on a shift among Latino men, where you saw him actually winning that demographic, while Latino women sort of stayed the same.
Andrew, what's your insight just as you talk about that shift, just why voters voted the way they did?
That's a great question. I wish I knew. But I think we can't, it might be boring to say, but we can't underestimate the importance of the overall atmospherics of this election, right? Joe Biden has a very low approval rating, 38, 39, 40 percentage points. That never changes. His disapproval rating up 56, 57, 58 percentage points. No incumbent party has won re-election to the White House with numbers like that. The right track, wrong track numbers, similar. Only 26% of Americans think America's on the right track. So Kamala Harris ran a 107-day campaign, but she started in a hole because of those larger forces, and it just wasn't something she could overcome on election night.
Andrew, we know that you were up most of the night blogging over at Yahoo News, so we really appreciate you coming in and breaking down all of this for us. It's great to have your expertise with us.
Thank you. Appreciate it.
The election results having a broad impact, of course, on the markets. We've got Yahoo Finance team coverage looking at some of the biggest moves. Brad Smith looking at the impact on EVs and adjacent clean energy names. Josh Lipton watching the tech sector, and Madison Mills breaking down the Trump trades overall. Brad, let's start with you.
Yes, Julie, the election may prove to be an inflection point for the future for motor vehicle affordability, production, and the clean energy that powers mobility. The poster child for electric vehicles, Tesla co-founder and CEO Elon Musk, already led the Bloomberg Billionaires Index with a total net worth of $258 billion pre-election, which is set to jump even more as the stock experiences a boost after the U.S. presidential election. For months, Musk has campaigned alongside Republican candidate Donald Trump and has even been considered by Trump for a cabinet position, but the potential appointment and time commitment that would require has certainly divided some of the major investors. But longtime Tesla bull Dan Ives of Wedbush published a note this morning saying the biggest positive from a Trump win would be for Tesla and Musk. We believe a Trump presidency would be an overall negative for the EV industry, though, as likely the EV rebates and tax incentives would get pulled. However, for Tesla, we see this as a huge positive. So, on the potential pulling of EV rebates and tax incentives, what does that mean for the legacy U.S. automakers here, known as the Big Three, Ford, GM, and Stellantis? And then let's throw in another newer name in the EV space like Rivian. Here's some of the reaction pre-market that we're seeing here just after the election, where you've got Ford and GM holding on to some extended hours gains, but you're seeing some slippage among Stellantis and then as well for the EV maker Rivian. Now, these car makers have announced revisions to their EV plans in the face of demand and production challenges, but that does not mean that their most equitable vehicles won't have electric versions in the future. Part of the major test already been passed. New labor deals were secured during the Biden presidency. However, a new test looms as investors are also pricing in a risk that Trump may reverse prioritization of other EV industry pillars such as charging infrastructure or even residential battery energy storage. And so with that in mind, shares of Sunrun and Plug Power, we're seeing both of those move lower pre-market, down over 15% for both of those names.
All right, Brad, thanks so much for breaking that down. We want to kick it over to the tech sector. Yahoo Finance's Josh Lifton taking a closer look at that for us. Josh.
That's right. Well, since January 20th, 2021, when Joe Biden was sworn in as the 46th president, the XLK, the ETF that tracks the tech sector, it's up about 75%. Of course, that easily bests the roughly 50% gain for the broad market over that same time. Analysts at TD Cowen say that Trump is likely going to deliver a materially more positive regulatory environment for mega cap tech than Harris would have, referring to names like Alphabet, Amazon, Meta, Apple, and Microsoft. They emphasize, for example, that Trump opposed a breakup of Google because geopolitically, the U.S. government needs a strong Google as it competes with China. In other words, their point is that Trump does seem to view big American tech companies as very valuable assets on that chessboard of geopolitical competition. Bottom line, TD Cowen analysts see Trump as materially positive across the board for the largest tech platforms because of his impact on, one, U.S. antitrust, meaning they expect softening remedies, settling existing cases, a laissez-faire approach to AI, and reviving M&A. And two, the EU. They think Trump will use tariff threats to pressure the EU to back down on tech regulation, which, of course, is shaping up as a headwind for big tech next year. Now, how about the semis and semi-caps, though? So names like NVIDIA, AMD, Intel, Applied Materials, KLA, and Lam Research, there they think Trump advisors are going to probably encourage decoupling from China regardless of U.S. company impacts. They could cite press reports of a network of buyers, sellers, and couriers in China who in fact bypassed the Biden administration's restrictions intended to deny China access to NVIDIA's advanced AI chips. Guys, back to you.
Josh, thanks. The Trump trade surging after the former president wins back the White House. Maddie Mills here now. What are you watching?
Yeah, Julie, I want to zero in on two aspects of the Trump trade here. First up, looking at small caps rallying, in part due to Trump's tariff policies. JP Morgan estimating that a proposed 60% tariff on Chinese imports could lead to a halving of earnings growth expected for 2025. But the smaller companies are positioned to potentially benefit from those tariffs since their supply chains are domestic. The favorable economic backdrop investors anticipate under Trump could also benefit small and mid caps. Another aspect of the Trump trade, of course, here, DJT shares surging following the election results, still up nearly 30% here. Now, the stock, it was seen as a proxy for the election, a very volatile session yesterday, rallying overnight up as much as 50% in the early trade. Leads me to one final point here I've heard from sources this morning, the idea that the market was this rational leader heading into this election. Betting markets, ticker symbol DJT, they were going Trump, and that was, in some cases, a better indicator of the election outcome than some of the polling. Reminder, though, DJT, it's not a stock that necessarily trades on fundamentals, so once the election trade ends, it's unclear what's next for this ticker.
Very unclear. All right, Maddie, great stuff. Thanks so much. Well, coming up, more political coverage ahead, a deep dive into crypto. That's next in our special coverage. Bitcoin hitting record highs above 75,000 this morning on the back of Donald Trump's presidential victory. For more on what this means for crypto going forward, we want to bring in Meltem Demirors, general partner at Crucible Capital. Meltem, it's great to have you back here on Yahoo Finance. You look at the reaction playing out in the crypto market today. Bitcoin, like we just said, surging on the back of Trump's victory. How big of a catalyst do you see Trump's administration being here for crypto over the next 4 years?
Well, this is the great big question, Julie, and it's great to be back. We've been doing this for almost a decade now. So here's to another decade of this. Here's what I will say. Look, this election, crypto was a major force in the American political landscape. One of the largest PACs in the United States was a crypto PAC. There was over $130 million spent in various races around the country by crypto PACs. And I think for many constituents, right, over 20% of American adults own Bitcoin. They want to see progressive policies. So I think a Trump victory is going to be really fascinating to watch unfold. Trump has made numerous statements about Bitcoin, notably at the Bitcoin conference in Nashville over the summer. He made statements about Bitcoin data centers, i.e. Bitcoin mining, and more permissive regulation and legislation that would allow Bitcoin mining to continue to be dominant here in America. Obviously, that has shifted from China to America over the last sort of 5 years, with America now being 40% of all Bitcoin mining, which is incredible for the American data center economy. Obviously, securities laws, Gary Gensler has sort of been a big hot topic for the crypto community. So that'll be interesting to watch unfold. But I think the biggest thing here is there was a lot of indecision. And last night, as we watched the election results come in, we were also watching the election odds on Polymarket, which is a crypto-based prediction platform, changing, and Bitcoin literally tracking Trump's odds 1-to-1 and hitting a new all-time high. So it's been an incredible 24 hours, really, for everyone in the crypto ecosystem.
Meltem, I think what people who don't follow the crypto industry closely are trying to maybe understand is what is the correlation, right? What do you think is going to be, for example, the regulatory change that would most directly affect the price of Bitcoin, for example? What do you want to see happen in Washington? What do you think the industry is prioritizing?
Okay, so let's kind of separate. There's Bitcoin, which comprises 54% of crypto's market cap as an industry, and then there's everything else. So let's talk about Bitcoin just for a moment. Bitcoin, we had 9 ETFs approved here in the US earlier this year in January. Over the last sort of 11 months, right, the Bitcoin ETF has been the most successful ETF launch of all time. Just last week alone, over $2.2 billion of capital went into these Bitcoin ETFs. BlackRock leading the way there with their IBIT product. But the Bitcoin ETF has been a huge structural boon for Bitcoin because there's all of this buying demand, right? And that's been really a big driver for enthusiasm around Bitcoin. Bitcoin rallying to hit new all-time highs, I think, is also partially driven by the 4-year Bitcoin halving cycle. In the early part of this year, we had a Bitcoin halving, meaning Bitcoin's inflation rate, or the number of Bitcoins mined by Bitcoin miners, got cut in half. And that also typically creates this 4-year cycle effect, where about 6 to 9 months after these halving events, we see new all-time highs being breached. We see these epic rallies. So Bitcoin right now is the asset to watch. And I don't think it's just driven by Trump. There's the structural shift of the ETF that's impacting market flows, and then also this 4-year halving cycle. So I'll pause there. I think Bitcoin is very different from the rest of the industry.
Right.
But the rest of the industry, I think, much more impacted by a Trump administration.
Meltem, we got to leave it there. We will catch up with you again soon, though, because we got a lot to fit in today. Thank you so much for your time. Coming up, the coverage continues, this time with our capital gains team. That's next. Stay with us. President-elect Donald Trump made quite a few campaign promises on his road to victory with key policies focus, including tax cuts, tariffs, the Federal Reserve, and immigration. Here to help me break down what's to come, the hosts of Yahoo Finance's Capital Gains podcast, Rochelle Akufo, Ben Worschel, and Rick Newman. You guys, thank you so much. We talked about a little bit earlier with Andrew Romano, Rick, about why Trump won. We have exit polls. We're trying to read the tea leaves, but also not just the read through on why he won, but what that means then for his presidency.
Well, one of the things the exit polls are not going to tell you, but I think if you read between the lines, they are telling you, is that there are just not enough voters willing to pull the lever for a black woman. This is nobody asks voters when they come out, are you okay voting for a black woman or not? But I think when you see Hispanic men, a huge shift over to Trump, there wasn't enough turnout from the single-issue abortion voters to put Kamala Harris over the top. And one of the things I thought is very telling is there seem to be many congressional races where the Democratic congressional candidate did better than Kamala Harris. So she's the incumbent. That's like reverse coattails. That's like she's the incumbent. They're not voting for her, but they're voting for other Democrats. So that suggests their problem isn't with the party, their problem is with the candidate or something about the candidate. I think that's just something really important to grapple with. People are clearly pissed off about the direction of the country. Right. They do blame Biden and Harris for that. Americans are dissatisfied. To my mind, the great irony of this is there's not much Trump is going to be able to do to address the things that voters say they're most concerned about. But now he gets the chance.
Right.
So he's got 4 years to demonstrate whether he can do better than Biden. My guess is that he can't, but I was wrong on what was going to happen this election, so maybe I'll be wrong about that.
And you talked about that number of campaign promises off the top. He made just over 40 of them and mentioned them about 200 times. And so I know, Ben, you had written about what he can do unilaterally versus what Congress can do and perhaps also where the courts could intervene on some of these. So tariffs, taxes, immigration, mass deportations. What is the likelihood of these?
Yeah, so I'll start with what he can do unilaterally, and there's a lot there. Tariffs is the big one, and immigration is the other big one. These are ones that that Congress has basically given the president a lot of authority, and not only have they given authority, but Trump has signaled he's going to push presidential authority potentially to new levels, even than what we've seen in 2016. He did a lot with tariffs in 2016 unilaterally. He's looking at different laws this time that could make it happen faster and go higher if he can get through the courts with that. And the same with immigration. He's talking about mass deportations, and he's talking about using the U.S. military to do that. We haven't seen anything like that in history, and so he's going to try a lot of things to do it. Congress is another issue. Taxes will be big, and he will help kind of run into Congress there, and so how that remains to be seen for sure.
All right, got to leave it there, guys. Thank you. Our thanks to the Capital Gains team, and tune in for their podcast. Coming up, stay with Yahoo Finance for full market coverage ahead as Morning Brief as futures surge amid Trump's win. We are seeing, again, big increase in futures. Just looking at the boards there, Dow futures up this morning by 1,200 points. The S&P futures indicating a gain of 2% at the open. The Nasdaq, the least strong of the three. It'll be interesting to see how that plays out. Nasdaq futures pointing to a gain of 1.7% at the open. Keep it right here on Yahoo Finance for all of your continuing coverage.
It's 9 a.m. here in New York City on this Wednesday, November 6th. Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Shauna Smith alongside Brad Smith, and let's get you the three things that you need to know today.
First up, stock futures surging as Donald Trump wins the presidency. The former president retaking the White House, sending markets swinging here. The bond market sells off, the 10-year yield soaring today, and meanwhile, the dollar and Bitcoin surging, the digital currency reaching a new record high.
Plus, the market sending the so-called Trump trades is soaring as well. The president-elect's media company, DJT, part of the Trump trade, that is off to the races here this morning. Plus, Tesla is spiking on the back of the victory, with one analyst saying that the company could actually see $1 trillion market cap.
All right, we're tracking shares pre-market there and honing in on the sector action as well. Shares of U.S. banks surged as investors wagered that Donald Trump would make good on his promises to lower taxes and reduce regulation for the industry. Meanwhile, energy stocks, they're getting a bit higher with Exxon and Chevron, those shares jumping. Renewable energy shares, however, taking a hit here pre-market. Starting with the biggest story of the day, Donald Trump has been elected the 47th president of the United States. Stock futures are surging, investors assessing what another 4 years under Trump means for the U.S. economy. As we're taking a look at U.S. stock futures, I mean, can we just be real for a second here and what's played out and the election that certainly to this point, many of the CEOs that we've spoken with and top brass at companies, even last year, they were expecting this to be a vitriolic election cycle, and it was just that. And it was an election of double standards in many regards here. You had on one side Vice President Kamala Harris, who had to be extremely disciplined and had to make her pitch to the business community, had to be buttoned up at every turn here. And then on the other side, you had former President Trump being extremely misogynistic at points, vile, and still some people showing up and a majority of people deciding to send him back to the White House, even in spite of that. And so now he's going to have 4 years to prove to that business community as well that he's able to deliver on some of those promises, whether it be on the tariffs that he's talked about, whether it be on corporate tax cuts, and for individuals, how that's going to all trickle through to what they've already seen in record highs after record highs over the course of this year in the stock market as well.
Yeah, and I think a lot of that remains to be seen, right? Just in terms of policies, what is actually implemented and how quickly we could see that. Rick Newman was on earlier this morning during our special election coverage, making the great point that, yes, some of this is going to be pushed through relatively quickly, potentially here. Of course, some of those ramifications, that all takes time to play out. So as we take a look at this morning, you have this risk-on rally across the board. You're seeing that play out in the three major averages, that so-called Trump trade that we have been talking about time and time again over the last several weeks and really several months here. That, of course, is taking a leg higher on the back of a Trump's victory. I also want to specifically point out, as we talk about regulation and policy and political policy implications here going forward, bank stocks, I think, also say it all, just in terms of what they think a Trump victory means here for this sector, that move higher here on less tax regulation here with Trump. Whether or not that gets done here, that obviously could be more likely, given the fact that we do have a GOP-controlled Senate, House, still too early to call there. But again, we are closely tracking the moves higher that we are seeing in many of these sectors closely tied to the Trump trade this morning. We continue our coverage of the 2024 election on Morning Brief with the lineup of key interviews. Our capital gains team, Ben Werschel, Rick Newman, and Rochelle Kufo, they are going to be joining us in studio later this hour. For the latest election news, scan the QR code below to follow our Yahoo Finance election blog. Great insight there from our markets team, tracking every move and what we are seeing, really a move on the heels of Trump's victory here and what that ultimately means here for your portfolio going forward. Well, here to discuss Donald Trump's 2024 presidential win, we want to bring in Jason Furman. He's Harvard Kennedy School of Government professor and former chairman of the Council of Economic Advisors under President Obama. It's great to have you here, Jason. Let's talk about, first, just take a step back as we try to figure out what Trump's victory means here for the economy, Americans' reading on the economy. I'm curious just how you're thinking about this morning and any insight maybe into how the Democratic Party is thinking about their path forward.
So in terms of the economy, it's just a real question. Does he do what he said on the campaign, which would be terrible for the economy. Tariffs, huge deficit increases, interfering with the Fed, deportations? Or does he do what he's often done before, which is break his word, not follow through on his promises, in which case the economy will be just fine because it's quite robust, strong place right now. The market is betting on the latter. That may not be crazy. I'm still a bit nervous about his promises. In terms of where the Democrats are, way too early to tell. People are still, processing last night. I certainly have a set of lessons I would like people to take, but we'll see.
What are those, Jason?
Look, I think President Biden campaigned as a centrist, won narrowly, and then governed in a more left way than I think made sense. The inflation, we would have gotten it no matter what he did. It was baked in the cake from the pandemic, the supply chains, what was done in 2020. But they took steps that added to it, not steps that subtracted from it. Mortgage rates right now are quite high. I think that's part of why people are upset, and that's closely related to not paying any attention to the deficit. So I think there's certain things that need to be recalibrated, especially around understanding the constraints you have on economic policy.
It's interesting among voters, at least in some of the AP exit polls as well, voters saying that the future of democracy was at stake if they were voting for Harris versus Trump voters saying that they were motivated by economic issues and immigration, which you were pointing out some of those economic issues that were really being cited here. What was the perception of the economy going into this? And now, what does that perception look like? We know that people tend to, and voters tend to feel the economy is better when their person is in office. So where do you think this is going to have the potential to move or swing, at least in sentiment, as we get into next year?
Yeah, look, I think the two basic facts about the economy, one, it was moving very, very strongly in the right direction, just extraordinary growth, extraordinary real wage growth, et cetera. But people were in an incredibly deep hole from the inflation in 2021, 2022, and the first part of 2023, and they weren't all the way out of that hole. Real median income was below where it was in 2019. Mortgage rates were higher than where they were in 2019. The unemployment rate was higher than where it was in 2019. So yes, everything was moving strongly in the right direction, but people weren't crazy to think that they had some real, economic issues and economic problems. By the way, those aren't all Biden's fault. Incumbents around the world are having trouble. This is not, direct line from the president to this, but it's a real thing, and you need to acknowledge it.
Jason, earlier on Yahoo Finance, we had a special election coverage, and I had the chance to speak with Douglas Holtz-Eakin, the former director of the Congressional Budget Office. And I asked him about the impact of a Trump presidency, what that would ultimately mean for the labor market, specifically focused on his immigration policy and what's been put forward. I want to play a quick bite from what we heard from Douglas.
This is not an economy that is overflowing with excess labor. And to cut back on the source of not just low-skilled labor, we're now seeing immigration at all skill levels, and those skills are needed in the labor force. So to cut that off and minimize it, I think is a risk that I certainly wouldn't take as a policymaker, one they're going to have to consider pretty carefully.
Jason, what do you think the potential economic impact of Trump's mass deportation plan is, more broadly speaking, on the economy?
Yeah, I agree with everything Doug Holtz-Eakin said. Just step back. The United States is an aging country. It's a country with a birth rate that is not sufficient to grow our population. If it weren't for immigrants, our jobs numbers every month would be negative instead of positive. Our growth rate would be considerably lower, and our fiscal challenges in areas like Social Security and Medicare would be much larger. I don't know the extent to which he's going to follow through on his mass deportations, but again, it's like a lot of these other promises. If he does the full-scale version of what he said, he is guaranteeing negative jobs numbers, lower growth, not to mention what I think is something that would be, incredibly cruel and inhumane.
And so with that in mind, as you're thinking about some of the larger economic impacts, especially as it is seen as largely inhumane, but at the same time, there's a component of immigration that we've talked about time and time again within each employment situation reading as well, and how important that has been. As you think about the other side of the the Fed's dual mandate on inflation, what impact do you believe that tariffs would pass through to inflation?
Yeah, tariffs would be a quandary for the Fed because they would be a one-time increase in the price level, but they also would hurt output and employment. And so, part of that would say you want to cut rates, part of that would say you'd want to raise rates, and then you have to decide whether to look through the whole thing. I think in general, though they would be inflationary, consistent with higher interest rates, all of that exacerbated by a fiscal expansion, which of all the things he promised on the campaign, I think is the most likely. The stock market may stop the crazy stuff on the Fed, may stop the crazy stuff on tariffs. I don't think it's going to stop trillions of dollars of deficit increases.
Jason Furman, who is the professor of the Harvard Kennedy School of Government. Thanks so much for taking the time here with us this morning.
Thank you.
Let's turn back to the markets. Futures surging amid Trump's victory. Let's head down to the New York Stock Exchange. Joining us now, we've got Michael Reinking, who is the New York Stock Exchange Senior Market Strategist. And as you're there up on the gallery, I know that you've probably been down to the floor, you've got the pulse check of some of the traders and the trading posts today. What is, if you will, the vibe down there right now?
Yeah, well, first and foremost, thanks, guys, for having me back on. Yeah, I mean, people were here, myself included, pretty early this morning. There's definitely a lot of buzz, kind of down on the trading floor. You have brokers that are, talking to their accounts, very early and really preparing, for the opening auction here, which is one of the biggest liquidity events of the day. And I'd say, the mood is pretty positive as you've seen this, kind of risk-on move, early to start the day.
Michael, I put this question to Steve Sosnick, or a similar question this morning. We're seeing, or we're looking at traders viewing tax cuts, deregulation as obviously a clear catalyst here for the markets going forward. Is the market getting a little bit ahead of itself? And I guess, do you see it as optimistic as maybe what the initial trades are showing at this point?
Yeah, look, I think, things have largely played out as you would have expected in a Trump win, right? Markets have started to position for this, in the months kind of leading in. And even last night, right, if you were watching futures markets, we really started to rally around 7 o'clock and they started to kind of sniff this out, and there really were no surprises in the overnight session. If you look around the globe, right, you're also seeing, other markets beyond just equities are moving as you would expect. You're seeing strength in the U.S. dollar, Treasury yields moving higher, some weakness in China markets. So pretty much like all of the macro moves that you would widely expect. Within, kind of from a sector perspective, within equities, we're seeing kind of strength in the small caps. One thing I would really note in terms of the Russell, which is up over 5%, we're hitting new highs. We're still about 2 or 3% away from that 2021 high. But if you look at the weightings within that index, right, you have financials, industrials, and healthcare all make up about each are 17% of that index from a market capitalization perspective, which is much higher than the S&P 500. So that's sort of explaining why it's able to shrug off some of this move higher in treasuries. Look, it'll be really interesting to see after the open, given this is widely started to kind of move and price into the market over the last month, if we do see any sort of sell the news response, or if we're able to hold those gains.
Yeah, and that's what I was actually about to ask about. Just the long tail that you believe there is to this trade, especially considering we've already punched through dozens of all-time highs over the course of this year. And now we're seeing this concerted move higher as the market's trying to price in already what some of the promises have been to this point. And then once the news comes of whether or not that will be enacted, there will be even more of a thinking and a strategy readjustment, if you will, Michael.
Yes. So I mean, you make great points there. A good friend of mine this morning kind of reminded me of a quote by former governor of New York, Mario Cuomo, where you campaign in poetry and govern in prose, right? So we're going to have to see how things, kind of how the sequences from the administration, kind of moving forward. From a market perspective, right? If you think about how things, we did see that Trump trade, kind of leading us over the last month. But broadly speaking, right, we've seen some money moving to the sidelines, right? You've seen volatility indicators moving sharply higher. So as you see the VIX move lower, you're going to see some of those systematic flows come back into the marketplace. You're going to see some money start to come back off of the sidelines, right? People have been expecting this volatility leading into the election. We didn't get that. We didn't get those tail risks associated with the long drawn-out process either, right? So you're going to see kind of money coming back into the marketplace, which should be pretty supportive. And we're also seeing companies start to come out of the buyback blackout window, which will also help to keep a bid beneath the market.
All right, Michael Ryan King, thanks so much for taking the time to join us here this morning. Coming up on a morning brief, we will break down today's biggest market moves as Bitcoin touches a fresh record high. Plus, we hone in on the sector action with banks and oil stocks both catching a bid this morning. And our election coverage continues next on Morning Brief. We count you down to the opening bell on Wall Street. We've got all that coming up for you in just a few minutes. We'll be right back. Bitcoin hitting an all-time high above $75,000 earlier this morning as Donald Trump wins the White House. The cryptocurrency now hovering just below $74,000. Joining us now, we want to bring in Brady Dale, Axios crypto reporter. Brady, it's great to have you back here on set. We spoke not too long ago talking about the implications of the election, what ultimately it means for the crypto market, a crypto sector moving forward. I'm curious, as we heard time and time again from President-elect Trump, that he wants to make the U.S. the crypto capital of the world. What does that look like?
Well, I think the first thing is probably he's going to get a new SEC chair. Someone else who is not going to be quite so hostile to the industry, isn't going to sue all of the best companies in the space. And I think on that question is just what happens to all these lawsuits and threats of lawsuits. Do a lot of settlements happen? Do they just get thrown out? Because these companies need to know that they can move forward. So I think that's the first thing. He's also said he wants all the Bitcoin to be mined here in the U.S. That might be a tougher task than he can pull off, but maybe get some more of it here. So that would probably please the American miners.
Yeah, indeed. We might see a lot more bathhouses like we've seen in Brooklyn pop up.
That's right.
Instance. Yeah, exactly. All these things considered, it seems like there was a growing bipartisan move as well to create a Bitcoin reserve. What's the reality that we see both sides of the aisle actually come together over that?
Yeah, the Bitcoin reserve. I don't know. That's a really interesting question. I mean, as Trump pointed out, they could start it really easy by just not selling all the Bitcoin that they have. Will they start to buy more is, I think, a much larger question. That's super risky. But yeah, folks on both sides of the aisle are at least tentatively interested in doing it. So I guess we'll just have to see. But it looks likely that the U.S. at least isn't going to sell the Bitcoin that it seized for some time.
You know, Brady, it's so interesting and a great point that Brad brought up just about the fact that we saw bipartisan support, it seems like, from Harris and also obviously from Trump when it comes to the future of crypto within the country. I'm curious then, why are we seeing such a surge this morning under a Trump victory? Talk to us a little bit more about that correlation.
Well, Trump was the only one that was really clear about it. I mean, Harris only spoke to cryptocurrency one time at one speech, and it was really vague. Whereas, like, you know, I watched Trump in Nashville say, you know, Bitcoin's going to go to the moon if you elect me. That's a much clearer statement, you know. And so I think that's really it. He said things that he will and won't do, whereas we never got that from Harris. So markets like certainty, and they like that they've given him answers ahead of time.
Do you think the crypto market's confident, though, that he's going to follow through on those promises? Because that's a whole nother question, right? Just how realistic some of those promises are.
I think they're confident. That doesn't mean they're right, but I think they're confident.
Yeah, anybody that says that they're going to send something to the moon, I mean, many people would largely question if they single-handedly could do it or enact policy. So it's going to come down to other elements of the businesses that you were mentioning as well that are looking to scale up and make sure that they can woo potential crypto investors and holders in the future. It's going to come down to potentially the utilization. Is there anticipated to be any major movement in utilization of crypto, which would perhaps give it more of commonplace within the transaction vernacular for many people who don't already engage with it?
Well, I mean, around the world, it is being used more and more all the time. I mean, there's tens of trillions of dollars of volume in stablecoins, which are hands down, you know, the most successful product that the crypto world has made. And if the United States, you know, passes some laws making it clear how stablecoins can be used and how they can be deployed by U.S. banks, that only is going to send that market higher. So I think this idea that no one's using it is a little bit of a misunderstanding here in the U.S. We're not using it, right? But a lot of folks around the world are actually using this technology, and I think it's going to sneak up on us and it's going to be everywhere pretty soon.
But a central bank coin versus using what is the largest market cap coin in Bitcoin, I mean, isn't that starkly different than in trying to boost the value of Bitcoin versus boosting the value or the usability or fungibility of some of the digital currencies that are U.S. or even any type of central bank backing as well?
Oh, well, a central bank currency is a whole different question. I was just talking about stable coins, so like privately issued stable coins. I think, and that's going to move a lot more quickly than big central bank digital currencies. That's a big question mark out there.
All right, Brady Dale, thanks so much for taking the time to join us here on
thanks for
Set
having
this
me.
morning. Well, bank stocks also surging after Trump's victory as investors bet on less regulation. We want to bring in Brendan Peterson. He is Punchbowl News financial services reporter. Brendan, it's great to have you here. We just had a number of the bank stocks up on the screen right now. They are taking this in stride, excited maybe about what some of Trump's policies would mean in terms of less regulation. I'm curious, as someone who has covered the sector most closely, what do you make of the extent of today's move to the upside?
Yeah, thanks for having me. I think it is a reflection that the Biden administration's financial services agenda is kaput. And we can make the argument that it was kaput before today because the banking industry has had a lot of luck in locking up some of the most important or significant regulations proposed by the Biden administration in court across the country. At this point, all those court challenges might as well be over because Trump administration regulators will come in and just pull them back. And if they're going to replace them, they're going to replace them with easier standards. There's a couple of sections, but we'll get to that. I think in general, capital reform as we know it is dead. A lot of the changes pushed by the Consumer Financial Protection Bureau to eliminate late fees or reduce them, overdraft fees, all these things that had a lot of like broad consumer appeal, but would have cost banks money. Those things are dead. Okay. I think when you're thinking about the broader financial services picture and like how those firms play into the economy, I think it's a little bit harder to see. I think there's a lot of big macro concerns about how exactly Trump handles the fiscal picture, how he contributes to the debt, what our governance looks like, and whether it's stable enough for investors to really hitch a ride to it. So we'll see. But in general, I'm not surprised to see those stocks going up today.
You know, you also talk about the Senate Banking Committee and how the change in makeup, of the Senate Banking Committee would ultimately mean and what that would do for prioritization of specific issues that some voters may have taken in the polls, but everyone who is banked is certainly going to be keeping close tabs on in the future.
Yeah, I mean, start with the obvious. With Republicans coming into control of the Senate, Tim Scott is likely going to be the next chairman of the Senate Banking Committee. Folks have been talking about Tim Scott for much of the past year as a potential pickup for a second Trump administration, because that man worked very hard to try to be Donald Trump's vice presidential pick. Obviously, that didn't happen with J.D. Vance. But now Tim Scott has said publicly, actually to Punchbowl News, at an event we hosted earlier this year, he wants to be the banking chairman. And there's a good reason to believe that he will be able to have a lot of influence and power there. The Trump administration does have legislative designs. I will say crypto might be their predominant focus. The legislative odds of that are a little higgly-piggly. But suffice to say, Tim Scott has said that this is a top focus for him, and he really cares about crypto. And so I think that's going to be a predominant focus. He also has a housing agenda that would make certain changes to how people get mortgages and like some financial literacy requirements, things like that. But in general, it's going to be a very different tone from the Senate Banking Committee from what we've seen from Sherrod Brown, the current chair who lost his race last night. Here's the last thing I want to say. Democrats are going to be in a very interesting position without Sherrod Brown. There has to be someone to succeed him. If you look right now at the top of the Democratic dais, where leadership is largely determined by seniority, the first couple people in line are Jack Reed of Rhode Island. He's the second most senior behind Brown, followed by Mark Warner. Both of those men, however, both Democrats, are chairs or top officials on other committees. After them comes Elizabeth Warren. The industry is not thrilled about the idea that Warren will be the top Democrat on that committee, even as a ranking member, even from the minority. So we've already heard rumors that there's a lot of pressure on Chuck Schumer to maybe have one of those other men, either Mark Warner or Jack Reed, step into this job to sort of keep Wall Street fears at ease. We'll see how that shakes out.
We will certainly see how that shakes out and how all of this plays out. Brendan Peterson, thank you so much for taking the time to join us here this morning. Punchbowl News, a financial services reporter. Thanks, Brendan. Our 2024 election coverage continuing. 10 a.m., a big guest lineup on Catalyst. First, we are recapping the latest market action with the opening bell. That's coming up next on Wall Street.
There you're taking a live look at the opening bell at the NYSE and at the Nasdaq here, where you're taking a look at the Academy Geopolitical Intelligence Group, ticker symbol VETZ, ringing the opening bell at the NYSE. And I believe that's the great folks over at TIPRO, ringing the opening bell at the Nasdaq. And some funfetti, of course. Let's take a look at the major averages as we begin today's trading session. You're getting a jump post-election here for the Dow Jones Industrial Average. It's up 3% to begin today's trading activity, 1,300 points in the green. The Nasdaq Composite, that's up. For the tech-heavy average, you're seeing gains there. I'll populate this chart for you here. You're seeing gains of about 1.8% to begin today's trading activity. Over the past 3 days, also up by about 2.9%. The S&P 500, you're also seeing gains there at the beginning of the day. That's up by about 1.9% here. Past 3 days, just shy of 3% in gains. Let's take a look at the sector activity that we're seeing just out of the gate here this morning. And yes, do not adjust your screens at all. This is a live look at some of those jumps that we're seeing in specific sectors. We've talked about the financial sector and how banks might be one of the major beneficiaries of less regulation. Financials pricing in a Trump win right now. That's up by about 5.5% to begin today's trading activity. On the other side, you've got utilities pulling back. That's down by about 1.3% to begin today's trading activity. But overall, you're seeing more gains than laggards. Looks like just a few of them here in staples, REITs, and then additionally in utilities here. Let's get on over to Yahoo Finance's Jared Blickry for more of a look at what's moving here early in trade. Hey, Jared.
Well, thank you, Brad. Let's take a look at the S&P 500 here. I've been tracking that. We had come down over the last a couple days to support, and we have just rocketed higher to fresh highs. S&P 500, and it looks like the Wi-Fi Interactive is a little bit slow right now, so I'll just talk my way through this. We do have the Dow at a record as well. And so basically, we just came back to minor support, and we have rocketed higher. The Russell 2000, by the way, if we take a look at that, that is now approaching its 2021 highs. So just an incredible run for the small caps. We've been wondering, when is their day to catch up? Well, it seems every November they just have this huge run. We saw one last year in the November timeframe. We saw one the year before that in 2022 when the bull market was just getting started. And this is the biggest run since that 2022 liftoff. So lots going on there. The 10-year yield, that's also been in focus here. We have that at a 4-month high. Now, the trick with that is stocks, risk markets generally do not like higher yields. But if that is in response to a growing and expanding economy, that's a little bit of a different story. But I think what's happening right now is that some of the expectations for future rate cuts, the Fed went 50 basis points, maybe that was too much. Those expectations are now lower. And so we're seeing the metals complex, for instance, take a really big hit. We saw gold down, we saw silver down big today, and copper as well. So the industrial metal. We mentioned financials surging the most in several years. That's another story where you have to go back to the beginning of this bull market in 2022 to see that kind of lift off. And in general, this was somewhat expected. We've been waiting for this November seasonality, these tailwinds to kick in. We saw it expressed through Bitcoin. MicroStrategy was lifting off, then it led Bitcoin. Bitcoin finally got its record high today, and now even Dogecoin is catching up. So I think it's a case where markets were very relieved today to have a little bit less uncertainty in the markets, and that's what we're seeing here.
All right, Jared, thanks so much for breaking down the early reaction that we are seeing play out on the street this morning. We want to get to another mover that we are closely watching here, a trending ticker at Yahoo Finance. You can scan the QR code below to check the best and the worst performing stocks of today's session, given the volatility that we are seeing. That's all done with Yahoo Finance's trending tickers page. We want to take a look and zero in on Super Microcomputer trading at the open after quarterly results here. Its second quarter sales forecast falling short of Wall Street's estimates. The company saying it still does not know when its delayed 10K from its last fiscal year will be filed. You're seeing that reflection to no surprise. The stock under a tremendous amount of pressure this morning, opening up off over 20%. Of course, as we take a look at maybe a longer term chart here, you can certainly see the fall that we have seen in this stock over the last several months since it did peak earlier this year, at least a year-to-date high earlier this year. I believe it was back in March. We have seen significant fall from then. So, of course, the question is what exactly that move, the further move lower that we could see, what it ultimately means for Super Micro, let alone also also just asking what the future of this company looks like altogether.
Yeah, a significant update that the company did have to provide here after the independent special committee looked into the financial information here. And so within this announcement, also announcing net sales going to be in a range of $5.9 billion to $6 billion. That is below the range, the previous guidance of $6 billion at the low end to a top end of $7 billion for net sales here. So significant repricing here that you are seeing in shares, as you were mentioning, Shauna. Also here on the cash positioning, they're expecting to report total cash and cash equivalents of roughly $2.1 billion, total debt of approximately $2.3 billion. And then additionally here, as we're kind of waiting to see when this gets finalized, I mean, some of this could still be subject to change. And I think investors are trying to get ahead of perhaps the worst case scenario, which is maybe net sales coming in even below the lower end or towards the lower end of this $5.9 billion to $6 billion range that they put out.
Yeah, and I also just think taking a step back on the risk here of it being delisted from the Nasdaq. Of course, when you take into account just the fact that it could be booted from the index, what ultimately that would mean. Obviously nothing good for Supermicro in the short term. So again, lots of questions just as we do await the additional filing there. But again, shares off just over 21%.
Absolutely. We're also tracking some of the cannabis stocks, the marijuana touching and cannabis business more broadly, cannabis, if you will, a ballot measure to legalize recreational marijuana. It failed in the state of Florida. More than half of the electorate did vote in favor of legalization for people aged 21 and older, but the measure failed to pass the 60% threshold required to get it into Florida's constitution. There you're taking a look at the reaction from cannabis stocks, Canopy, Tilray, Curaleaf, and Trulieve. And to this juncture, many of the companies, plant touching at least, have needed to make sure that they could operate within states where they could acquire licenses and acquire to grow. Something that you've heard in the ERP landscape for decades at this juncture is something that the cannabis companies have also needed to apply to their businesses to be able to operate in specific states to this juncture. And so it's unclear what the pathway forward will look like in the state of Florida at this juncture.
Yeah, this is a huge loss for the cannabis industry. We talked so much about why they were optimistic or the potential to be optimistic if this were to be passed. The fact that the vote did fall short, clearly a huge loss here for the industry. 23 million residents in Florida. You talk about what that could have potentially provided in terms of a revenue boost. Trulieve, we had them up on this. We should have them up on the screen right now. You're looking at a loss of just today about 0.1%, but they were one of the big contributors to this campaign, forecasting as many as 2.7 million people would have moved into the legal weed market. So again, the fact that this was not passed, a huge blow to those cannabis companies, and to no surprise, you're seeing those stocks under a bit of pressure here this morning.
Nebraska won though, so hey, if you're in the Cornhusker state, right?
Yeah.
Nebraska, Cornhusker state, yeah. You've got some marijuana coming your way.
There you go. Not enough though to change the tone here on the street. Yeah. All right, former President Donald Trump has been elected the 47th president of the United States, defeating Vice President Kamala Harris. Stocks, well, they are soaring at the open on Trump's victory. Yahoo Finance markets reporter Josh Schaefer has been blogging every move since very, very early this morning. And Josh, it really is remarkable just taking a look at the extent of the street's reaction.
Oh, yeah. I mean, you're seeing it across the market, as you said, Sean, and you're seeing it in a lot of those so-called Trump trades, right? Areas of the market where people thought a Trump presidency would be better for that area of the market than perhaps a Harris presidency, right? I'm thinking about maybe financials, regional banks. I just looked at the regional bank sector opening up almost 10% at the open, right? You're seeing a clear trade there. But I think the overall market sentiment, just the rally that we're seeing across the board, strategists are pointing out in early notes reacting to this, essentially, we got a decision. I think the biggest question from everyone we've been interviewing really over the last month now was, what about this contested election? It doesn't feel like we're going to have an answer Wednesday morning. It doesn't feel like we're going to have an answer Wednesday morning to the point where it almost felt like that was maybe priced in. Mm-hmm. We have an answer. And I think that is a little bit of the surprise here, and perhaps just that, in some ways, I guess, a relief rally that market doesn't like uncertainty, right? Well, we have an idea now. So that, to me, at least explains kind of the index level move that we're seeing.
So what are some of the early reactions from the street as well right now? What are some of the notes that are starting to be popular? Is this massively changing anyone's projection to one direction or the other?
Yeah, you're not seeing, for instance, like the S&P 500 targets that we track and things like that, right? You're not seeing a ton of movement there. Jay Hatfield from Infrastructure Capital Advisors did boost his 2025 target to 7,000, which I think is interesting, right? So he's talking about perhaps the impact of Trump policies once we get into 2025, how that could potentially help overall the corporate structure, right? Thinking about things like tax rates, and if there was fears of corporate tax rates rising in 2025, you now take that out of your model. Maybe that's a positive for earnings in 25. But I think, Brad, you're going to hear a little bit more about that as we get further into this, right? Remember, we have supposedly, or we have a confirmed decision now, or it seems like we have the president-elect, right? But do we actually know what the policies are going to be? Right. That's still a massive looming question. It was interesting to see, knowing that Trump is the elect. You had Mike Mayo from Wells Fargo coming out saying this is good for financials. You're starting to see some of the popular analysts in the different sectors sort of making sense of what this means for their sector. I know Bank of America downgraded 5 below today. Sort of one of the Harris trades was potentially those low-end consumer stocks, right? And perhaps a Harris presidency, those companies would benefit. So Bank of America citing the potential tariffs, right? And tariffs that these companies that supposedly Trump is going to impose. Right. If you have overseas exposure, he imposes those tariffs. That's a headwind. Those stocks had already been lagging for the past month, but you're seeing that play out a little bit in the market as well.
Yeah, Dollar General 5 below. A lot of the businesses that you were just mentioning a moment ago. Josh Schaefer, thanks so much. Appreciate it. Coming up, everyone, we're taking a look at the healthcare sector off of the back of results from CVS. That's on the other side.
Let's take a look at healthcare stocks on the move in the wake of the election results, particularly those with a large exposure to privately managed Medicare Advantage plans. Trump has promoted, and Republican Party in general has promoted in the past. Here to break it down and what to expect from the sector under a Trump presidency, as well as some key earnings that we got out this morning, we want to bring in Brian Tanquilid. He is Jefferies Healthcare Services Equity Research Analyst. Brian, it's great to have you here. As you take a look at the reaction that we are seeing in some of these managed care stocks here this morning, I'm curious, just from your perspective, a regulation or a policy, maybe more so perspective, how big of a catalyst do you see the Trump administration acting as a large catalyst here for this group?
Hey, good morning, Shauna, and thanks for having me. So yes, so just to your question on the managed care stocks, what I would say is that there has been a lot of pressure over the last couple of years from the Biden administration on these Medicare Advantage plans, right? So the expectation is that because the Republican Party is very pro Medicare Advantage, they'd rather have these private plans run the Medicare program away from the government-run program that we have right now through traditional Medicare, that the pressure on these plans will ease going forward. And so I think the reactions that we're seeing today are about appropriate, given that expectation and the sentiment that we've seen in the group.
Okay, so what does that kind of hold for some of the longer term catalysts that you would expect to play out for healthcare now under a new strategy from the new administration once the changing of the guards happens?
Yeah, Brad, one of the things that we're watching really closely are these health insurance exchange subsidies. Now, Congress has to act on these, so they're expiring in 2025. It came out of the COVID stimulus bill. And basically what it is that they're about, millions of people that are in these health insurance exchanges today that are getting subsidized by the government to buy health insurance. Now, once that expires, what happens to those things, right? So it looks like we're going to get a sweep with even Congress turning red across the House and the Senate. So the bigger question today is, will Congress act and extend these subsidies? And, again, it expires at year-end 2025, so something needs to be done mid-year 25. So that's one. And then I guess on the Medicare Advantage side, that's really more of a longer-term thing because we already have policy set for 2025. So really the changes in Medicare Advantage from an administration perspective will not happen or will not occur until we get to 2026 pricing. So that's really later in 2025 before we see any benefits from the new administration.
Brian, let's zero in on CVS. They were out with earnings results this morning. We didn't get guidance from the company. We did get an update on leadership. The new person that's heading at an insurance unit is going to be Steve Nelson. He's the former CEO of United Health's insurance division. I'm curious what you made of the results that we got out this morning and maybe what this, not so leadership shakeup, but I guess more certainty in terms of the leadership ranks, maybe what that signals for the direction of CVS.
Yeah, no, I think the stocks are reacting well, partly because of the elections, but also I think they gave some insight into how we're thinking about 2025. And what we're taking away from it is that management here, while they don't have a lot of visibility into how 2024 will shake out, even though, we're a month and a half away from year end, right? The fact that they pointed to all these moving pieces that will drive growth, or in theory, for next year in terms of improvement in margins, in terms of bonus payments that they're going to get from the government, all pointing to EPS growth in 2025. I think that's how the market is reading that, and that's why we're seeing a positive reaction in CVS. Now, new management is not a bad thing, right? I think Steve Nelson has proven himself as a leader both at United and other stops that he's had before taking this position. So he has the pedigree, he has the experience to hopefully turn the business around. And again, it seems like the management team in place, with Prem now being the group president, and even with David as CEO, it feels like they have a plan in place, and it's just a matter of execution, and also some improvement in the macro stuff.
Brian Tanquilid, who is the Jefferies Healthcare Services Equity Research Analyst. Great to have you here with us. Thanks so much, Brian.
Thank you, guys.
Coming up, everyone, Republicans have won both the House and the White House and the Senate, I should say, but the House of Representatives, that remains up for grabs. Our capital gains team joins us live on set to discuss next. With Donald Trump taking the White House and Republicans taking control of the Senate, Americans now waiting to see which party will control the House of Representatives. A win for Democrats will provide a check on Trump's power. Here to discuss are the hosts of Yahoo Finance's Capital Gains podcast, Rochelle Akufo, Ben Werschel, and Rick Newman. And Ben, here, broad strokes, what can we expect from the more than 50 uncalled House seats as of right now?
Yeah, so the magic number everyone should remember is 218. So that's the control. And right now, I'll just have the numbers: 180 seats Democrats have won, 198 for Republicans. So it seems like Republicans have an advantage, but there are a lot of West Coast races that still haven't been called, and they're pretty safe seats. So it's going to be close. I think the bottom line for folks is, as I read in a note this morning, it's going to be a majority of 5 seats or less, probably in either direction. So it's going to be close one way or another, and we may not know it for days. It'll probably tighten in the coming hours, and then it could be days before we know whether we have this check, as you mentioned.
And we were trying to have a look at some of the seats that could potentially still be flipped here. It is still a very tight race. And as Ben said, we probably aren't going to know the exact details for a number of days. But a lot of people are wondering what this means for the balance of power. Of course, we want to bring in the fact that obviously President Biden, still our current president, still has some days left before Trump comes in. But in a lame duck Congress and with essentially a lame duck president, what can Biden really get done, Rick?
I don't think he can get much done with Congress at all, because it remains a split Congress until, so the new Congress will come in early January. That is before Biden actually leaves on January 20th. So there is this one issue hanging out there, which is this suspension of the debt ceiling that Congress passed last year as part of that budget smackdown. That disappears in early January. So the debt ceiling is once again in effect. So Congress doesn't have to deal with that right away. They're going to have several months while we get in. But we're going to be in one of these irritating periods of extraordinary measures, and then here we go down. Are we going to go down to the wire again? Days before we're about to default on the U.S. debt. I mean, this is one of the most tiresome exercises, and we may be about to go through this again. There are some things Biden could do without Congress, though. Some sort of executive action from some foreign policy things. One of the things I'm watching for is, does Biden do anything to tighten up on sanctions on Iran that already exist? Biden has basically been pretty soft on those sanctions, I think because he wants Iranian oil to keep coming on the market, to keep oil and gasoline prices down, to help Kamala Harris get elected. Well, she's not going to get elected. She lost, so he doesn't have to worry about that anymore. There are also things Biden could do to tighten up sanctions on Russia and their oil sales, which, of course, are helping them fund the war in Ukraine. Is he going to change any of this? I don't know, but those are some things to watch for.
The economy seemed like it was one of the largest issues for voters who went in favor of former President Trump in this election here. What does the day one look like for President Trump to speak to those voters?
Yeah, I mean, Harris did cut into Trump's lead in some sense on the economy, but again, the prices was the issue. It's been two years since inflation peaked, and that is what voters tell you over and over and over again they care about. What's interesting about Trump on day one, as you mentioned, is that a lot of his policies could actually increase inflation. Could increase inflation. Tariffs, that brings up prices. Mass deportations, as he's promising, could bring up could discombobulate the labor market. So it's a real open question of whether he delivers on these prices that voters clearly care about.
You know what? I'm not sure that this really came down to the economy in the end.
No.
Because voters, to the extent they're paying attention to these policies, Trump's tariffs have gotten a ton of attention. Everybody who covers this, us and everybody else, has been saying tariffs add to costs. They push prices up. They are inflationary. People voted for Trump. They knew that, or they should have known that, and that didn't sway them really. I'm going to keep saying this. I think the unstated factor in this election is that there weren't enough Americans willing to vote for a black woman. That is not going to exactly come out in the exit polls. But if you read between the lines, you can see this huge shift among Latino men away from the Democrat toward the Republican. In other words, away from the woman candidate toward the male candidate. I think that's good, one of the hugest takeaways. I just don't know how clear that's going to become.
And we know that obviously immigration was an issue that Trump kept hammering home, even though he was the reason they didn't get the bipartisan legislation through. But it's interesting when you look at some of the economic damage, if these mass deportations do in fact come to fruition. It's something that has been tried before, and it doesn't end up bringing back more jobs. Right. It doesn't end up increasing wages. But for some reason, the Democrats either couldn't connect the dots in that message, And people, it's a very vitriolic issue that people have there.
You guys have a lot of work here today, as we all do here at Yahoo Finance, continuing to bring some of the updates throughout the trading session to our viewers here. Our capital gains team joining me here on set. Thanks so much.
Thanks, Brad.
Absolutely. Everyone, that does it for Morning Brief here today. Stay with Yahoo Finance. Shauna Smith, Madison Mills. They've got more reaction to the presidential election. That's coming up next on Catalyst. And we've also got a lineup of guests tackling the latest moves in currencies, U.S. Treasuries, Tesla, and much more. Stay tuned.
Welcome to Catalyst. I'm Shauna Smith alongside Madison Mills. 30 minutes into the U.S. trading day. Let's take a look at the three catalysts that we're watching this hour.
First up, the U.S. dollar surging today as Donald Trump wins the White House. We break down the FX moves that you need to know as the dollar sees its best day since Brexit in 2016.
Plus, Tesla shares jumping. Elon Musk is seen as a beneficiary of Trump's White House win. We will discuss with Tesla investor Ross Gerber.
And we'll bring you the outlook on the future of the Fed amid a Trump presidency as the central bank kicking off its two-day meeting in Washington.
The dollar surging today, posting its biggest one-day gain since Brexit as Wall Street digests a Trump election victory. Joining us now for what's next in the currency market, we want to bring in Mark McCormick. He's Global Head of FX and Emerging Markets Strategy at TD Securities. Mark, it's great to have you here. So first, just your reaction. We did see a little bit of stalling here in the dollar move to the upside this morning, but still a significant climb.
Yeah, this follows pretty much every red wave playbook. If you think about the context of this, there's U.S. steepeners, there's a repricing the Fed. The U.S. is going to have a higher terminal rate than the markets thought a few months ago. And this is broad strength for the dollar. That reflects the macroeconomic policy changes we could have. It also reflects the fact that there's a lot of scope now. If Trump can get the House as well, that we have deregulation, we have tax policy, we have fiscal policy, we have immigration, and we have trade. So the market's got to adjust to reflect that.
How much conviction, Mark, is there behind this dollar trade that we're seeing?
I think we're just starting to see it. I would say we've been bullish the dollar for the past couple of months. Part of it was the uncertainty around the election, that the markets just in itself was not trading this event. Again, it was a binary event with huge tail risks. Now we're starting to see what those tail risks look like. I think if you kind of take away the event risks that we had and where we're going with the election versus how we got here, the U.S. data has been outperforming the rest of the world basically since summer. So if you kind of think about the strength of data in a data-dependent world, U.S. data is doing stronger and better than what we've seen out of the Eurozone and China. So there's a fundamental story here that U.S. asset markets, U.S. equities, again, the terminal rate's already been repriced higher. All these things have legs and now have a continuation that's going to move into an environment where now we have political uncertainty in Germany. We know that China is going to deliver stimulus, but now it's going to be on the defense. So now it's like the clearest momentum trade is to just buy into U.S. exceptionalism with a much stronger U.S. dollar coming through the first part of next year.
As Mark, how strong of a dollar are we going to see?
I'd say we laid this out in our pre-election notes in terms of scenarios. With this red wave, euro could get to parity. That's an easy target. I don't think it's out of the realm possibility. Dollar China's probably absolutely going to revisit the 730 levels. I think the one that's going to be kind of interesting to watch will be dollar yen. I think this all but assures that the BOJ is going to hike in December, largely again as a way to preserve the yen. And also one of the things that came out of the recent Japanese elections is really it's been the cost of living shock. A lot of people thought it was an LDP scandal, but essentially a weak yen, really low real incomes and real low interest rates has been fueling essentially disapproval ratings in Japan. So the other currency you want to keep on your radar screen is the Mexican peso.
Well, let's go exactly there, Mark, because one of the questions I had for you, right, was going to be, what are you more concerned about, a trade war with Europe or a trade war with Mexico?
I would say from Europe's standpoint, the trade war is it's absolutely the worst time. Again, if you think about what's happening in Europe, they don't have the fiscal ammunition to grow the economy. France is moving in one direction. Germany's moving in another direction. There's going to be snap elections, most likely in Germany next year. And there's no fiscal architecture to pull the whole thing together to grow Europe and to fight against, the relative strength of the U.S. economy or the rate differentials that are coming as a result of monetary policy divergence. In Asia, I think things are a little bit different because most countries in Asia have savings. It's just that they've exported those savings for the last 5 to 10 years. I do think there's room here that we could see Asian currencies actually start to outperform at some point. And there is room that at some point, maybe China and the U.S. come to a deal. Stronger, essentially, renminbi for a weaker dollar. Maybe you see some industrialization and some manufacturing plants coming from China into the U.S. But I think the biggest thing you want to watch on trade is Mexico. Mexico really is in a tough position right now because, number one, there is a sunset clause in the USMCA deal that kicks in 2026. So the U.S. can basically say to Mexico, hey, we want you to reduce your trade relationships with China, which has been a big part of the Mexican economy recently. The other thing they could do is if the U.S. does decide to strike a deal with China and bring China into the U.S. supply chain, try to reindustrialize the Rust Belt, Mexico's the biggest loser because Mexico is then kind of cut out of the U.S. supply chain or the North American supply chain. So I think if you think about all the risks here, especially with the stronger dollar, Fed repricing, steeper U.S. curve, the Mexican peso is also going to get hit as a carry trade. So you've got geopolitical risks, trade risks, and even kind of market risks that all pointing in the wrong direction for the peso.
It's interesting because in 2016, we saw the peso moving to the downside following that election result, but then we saw a rally for, I think, the next year after that. Is there any risk of that repeating itself here?
Well, I think, again, the markets are always kind of forward-looking, so I don't think anyone can really focus on USMCA right now. There's so many things that are going to happen early on in the administration, particularly because on day one, they can just go with tariffs and immigration policy and focus on that. So I think with the peso, it's going to be, it has been kind of one of the darlings since 2022. It was like, if you think about how we got here, we had surprise election results in Mexico, which, again, the government has moved extremely left. They only have 2 seats shy of an absolute majority to change the Constitution. So the local risks have risen. The other thing is that, as we've talked about on this program multiple times this year, the carry trade is unwinding. And again, that's as expected. And now with the impact that we'll see on the Fed and higher U.S. rates, steeper U.S. curve, stronger dollar, carry trade is going to continue to unwind. So I don't think that there's a very strong bullish case for the Mexican peso over the medium term. I think a big concern is people try to hang their hats on the onshoring. The onshoring of Mexico and the U.S. being connected to the same supply chain, North America basically decoupling from Asia and other parts of the world. I think, again, with Trump, you just don't know where it's going to go. He's not ideological. There are discussions in the market that maybe the U.S. tries to strike a deal with China. Again, a stronger Chinese renminbi, stronger Chinese currencies for a weaker dollar, because that weaker dollar is needed to reindustrialize the Rust Belt. So I think in all these kind of iterations, if Mexico loses its place in the U.S. supply chain, there's not going to be a big rebound in 2026 if this is kind of the path that we're moving towards.
All right, Mark McCormick, we got to leave it there. Thank you so much for joining us this morning. Appreciate it. Treasury yields continuing to spike on the heels of that Trump victory, with the 10-year continuing to near that critical 4.5% level. You're looking at the yield curve across your screen here. Investors betting that a Trump presidency could fuel economic growth, but could also risk reigniting inflation. That's showing up in these moves today. So here with more, we've got Sonal Desai, Franklin Templeton's fixed income chief investment officer. Sonal, it's great to have you here. So it's interesting. We still don't have the official results in terms of the House, but JP Morgan's saying that a red sweep could lead to a 4.6% level in the 10-year. And we see it continuing to inch towards that this morning. What do you make of that move?
So actually, I'd say that the speed of the move is probably, to some extent, a reaction to the results. We might see the move. We might see some volatility in the period ahead, and I would fully agree that that sharp spike probably to some extent is a reaction to the expectation of solid growth, deregulation, tax cuts, that type of stuff. And the other part of that, of course, is that it can lead to greater inflation and wider fiscal deficits. I actually have been calling for, without even getting to the stage of those of a sweep or not a sweep, we have been calling for some time for a Fed neutral rate of about 4%. And then if you assume that the economy is not going into a recession and an upward sloping yield curve, you actually already very easily get to the 4.5% to 5% level. So this move is sharp, and we might get some additional volatility as the market passes through the exact timing of different policies which might be enacted or might not be enacted. But I do think the directionality of it is exactly correct, and it could even be higher.
So now, do you think it's enough to make the Fed think twice before potentially cutting tomorrow?
No, I think that the Fed will cut tomorrow. The Fed, this is a dovish Fed, which does not like to surprise markets. Markets are pricing in 95% probability of a cut tomorrow. And honestly, there's nothing concrete in the data which would indicate that the Fed should dramatically change where it is positioned between yesterday and today and tomorrow. So they will cut by 25 basis points. However, the market, I didn't think that the Fed had made a catastrophic error or anything when they cut by 50 basis points. I did think they were somewhat imprudent to go by 50 when they could have easily done 25. And the economy didn't really need 50. Okay, so they've gone 50, they've done another 25. And I think they will do another 25, I think, tomorrow. After that, however, the market has done has gone a long way towards readjusting its expectations for Fed rate cuts to now bring the end point of the cutting cycle closer to that 4% level. Today, we're looking at really something like 3.75. So the market is actively pricing out rate cuts. I think that the Fed should take advantage of this and actually not encourage the market to expect massive rate cuts. Again, with the idea of prudence, because definitely we don't know how expansionary the fiscal position will be. I would note that under either presidential candidate, the fiscal policy was nothing short of profligate, whether it was 3.5 trillion or 7.5 trillion. 3.5 trillion only looks small when compared to 7.5 trillion. So I just note that, fiscal profligacy seems to be very, very fashionable.
Right, but Sonal, I guess the question is here, given the results that we have gotten from the election, the fact that we could be looking at up to $7.5 trillion of extra spending here over the next 10 years under Trump, and compared to what it would have been, clearly fiscal, I guess, cutting is not in the cards or not a priority really for either candidate. But here we have President-elect Trump, who has clearly put forward policies that may be inflationary. I guess at the Fed, how do you think the Fed is then assessing that risk, given what you were just saying, just the fact that there is so much uncertainty just in terms of what exactly the policy is going to look like?
So I think that that's why it would make sense for the Fed's endpoint of its cutting cycle, based on the last SEPs, was between 275 and 3. And now the market is almost gifting the Fed the possibility of changing what that endpoint would be. And I think the Fed should take advantage of that and in its next set of SEPs actually revise where it sees the endpoint and basically guide the market towards what the market has already priced. Does that mean that the Fed cannot cut at all? They can cut, but they need to cut more slowly, because if you get an immediate massive expansion of the fiscal deficit, again, we're looking at 7.5 trillion, which is over a period of time, but with big assumptions, because last time, things which would on the margin be inflationary, like tariffs, those came at the end of 1 year. So, and again, we don't know to what extent the tariffs will actually be put on exactly as they were campaigned on, and to what extent these were initial positions for bargaining or making deals. We really don't know. So I think what makes sense is for the Fed to just slow down and wait and see before taking more steps. Yes, and it does have an impact. The Fed has less room to cut. I already thought the market was overpricing cuts, and now the market is moving towards what I think may be a bit more realistic.
Sonal Desai, always great to get your insight. Thanks so much for hopping on and joining us here this morning. Coming up, we will take a look at some of today's biggest movers of the day and give you the news behind that moves. Again, as you take a look at the three major averages, we are seeing a massive risk-on rally here this morning. Just about 44 minutes into the trading day, you're looking at the Dow up nearly 1,300 points. You've got the S&P up nearly 2%. The Nasdaq also up just about 2% as well. We'll be right back. Now time for some of today's trending tickers. You can scan the QR code below to track the best and the worst performing stocks of the session. You can do all of that with Yahoo Finance's trending tickers page. Let's take a look at Novo Nordisk, a stock that is trending here at Yahoo Finance this morning. It's off nearly just over 1.5%. Mixed results for the third quarter, narrowing its 2024 sales growth guidance. Still, third quarter sales for its weight loss drug Wegovy soaring. That was up 79% from just a year ago. Yahoo Finance spoke to the CFO about the company's position in the weight loss drug market. Take a listen.
So top line momentum is very solid for the company, and that's really a function of the fact that we have very compelling products in especially Ozempic and Wegovy that is driving top line growth both in the U.S. but also in international operations.
So again, we're looking at shares of Novo Nordisk today under just a little bit of pressure. But again, Maddie, when you take a look at that 79% figure year-over-year growth in Wegovy, maybe that's helping caution some of that cautious optimism that we're seeing play out on the street.
Yeah, and it's interesting because there has been a little bit of volatility in the stock in recent months. You can see that between September and November there on your screen here. But we have seen stocks declining from their peak back in June by, I believe, about 25%. Obviously seeing a bit of a recovery here following that news about the increase in sales for the Wegovy drug. But also, let's not forget, they've got news of this next-gen obesity treatment. I believe it's pronounced CagriSema. It's undergoing a large trial right now and could be delivering those results as early as next month. So that could also be a potential big next catalyst here for the stock if they are able to capitalize on yet another obesity drug here. Next up, Dollar Tree dropping on the back of Trump's victory after a report from the National Retail Federation found that Trump's tariff proposals could cause prices to spike. The report saying that tariffs could cost Americans between $46 and $78 billion in annual spending power. And a key part of this report from the NRF also specifically calling out low-income consumers, saying they will be the most heavily impacted by consumers. And I mean, let's be honest, guys, this is just the latest headwind for Dollar Tree, right? If we can take a look at the stock year to date here, we can show just the degree of pressure that the stock has been under. And you can see a lot of discount retailers falling in sympathy with Dollar Tree today. You can see down year to date about 56%. And given that we do see the swaps market pricing in more inflation to come, that could potentially be another headwind for low-cost retailers.
Yeah, certainly. And also we just had a Dollar Tree specific story, their CEO stepping down yesterday, which added to some of the pressure. But here we are today as we step out and take a look at maybe more of the macro picture here for some of these off-price retail chains, if you want to call it that. They were very much viewed as a winner here or beneficiary under a potential Harris victory. So the fact that we aren't seeing that, and ultimately now what Trump's policies, the policy implications of tariffs, what they could do for inflationary measures down the road, that is looked at as a real risk here for so many of these consumer discretionary names, especially those at the lower end here. So to no surprise, you are seeing some significant losses. It is interesting to note the degree of the drop between Dollar Tree and also Five Below, because you do have Five Below off nearly 9% today in early trading. All right, finally, let's take a look at Tesla. Shares of that stock are surging today on the back of Donald Trump's victory. Trump mentioning CEO Elon Musk in his speech following the election results.
We have a new star. A star is born, Elon. He's a character, he's a special guy, he's a super genius. We have to protect our geniuses. We don't have that many of them.
For more on how Trump's win will impact Tesla, Ross Gerber Kawasaki Wealth and Investment Management CEO. It's great to have you back on the program, Ross. So here we are. Looks like at least initial reaction that maybe Musk's big bet here on Trump pays off, at least for him. I'm curious, as a Tesla shareholder, how are you looking at this?
Well, certainly it puts Elon in the driver's seat as far as access to the White House. I think there's this difference between what's great for Elon and what's sort of great for Tesla. To the Tesla's advantage, I would assume that this would help them getting, at least on a federal regulatory basis, get some of the heat off of them because they have so many investigations. On a state level, it doesn't help them at all as far as getting approvals for robo-taxis and such. You know, what I really think is it's too early to determine if Trump's going to roll back the subsidies to EVs, and this will hopefully prevent that from happening and hurting Tesla, and hence the rally, although Trump has threatened to do this. So So I think it's too early to be seeing how much this really is going to affect Tesla in the short term or the long term. But obviously, having Musk as of now in Trump's favor, can't hurt Tesla, and that's why the stock's rallying.
So what are you doing with your Tesla shares? Are you buying any more?
Well, no, I'm not buying any more. We've been lowering our stake in Tesla because it was our top position several years ago. We made a lot of money. We still think the challenges Tesla faces to get full self-driving to work is not going to be solved by Donald Trump coming in the White House. So if anything, I would argue the opposite. It's more things that Elon's going to be distracted from working at Tesla. But that said, Tesla has its own problems to solve, and we're investors in Tesla, and we have a position in Tesla at my firm. It's still fairly substantial, and we're not planning on getting rid of Tesla, so that's where we're at.
So Ross, I guess my question is for you. Here we are today with market cap at just over 900 billion. Dan Ives of Wedbush was out calling for $1 trillion in market cap, not too far away. What do you think? I know there's some apprehensions just in terms of the distraction piece of this and maybe what else is at play here for Tesla specifically, but how realistic is that? We're not too far.
Well, I think that there's a lot of people who get on television shows by saying really big numbers, and Dan is certainly one of them, and I love him and I respect his analysis. That said, you have to back into these numbers. If you're going to be worth all this money, you sort of have to say, like, well, where does the earnings come from? And that's really what we're waiting to see with Tesla, because the bottom line is full self-driving doesn't work at this point. Robots are not a viable market at this point. So a lot of what we're talking about is many, many years into the future, and Tesla has to get through the now and the short and the medium term before they get to the long term. So as I said, I think Tesla has a lot of challenges in front of it. It's got probably one of the highest valued tech stocks in the market, if not from a large cap perspective. And so the stock certainly reflects this, optimism. And as I said, I think I'm not a buyer of Tesla for sure at these prices, and I've been a seller around these prices as well. So, I think if you want to own Tesla, you should. It's kind of what I said about Bitcoin. If you want to own Bitcoin. I can't tell you what it's going to do. If you want to own Tesla, it kind of goes in the same risk bucket in your portfolio, and it's part of our risk bucket in our portfolio. And it's just not the biggest risk that we're taking today, which is more in things like computer chips like NVIDIA, because Tesla and Elon are sending all their money to NVIDIA. And that's my preferred play right now in the market over the next several years.
So it sounds like you think it's also bullish for the broader tech rally, but I want to stick with Tesla for one more minute. We have a photo of Trump and Elon Musk together last night. Musk posted this just after midnight. Given the relationship that the two clearly have, let's say that full self-driving technology is fast-tracked for approval, despite what you mentioned that there are still questions about the efficacy of that technology. If it's approved too quickly and it doesn't actually work, could that end up being bearish for Tesla, given what that would mean in terms of company news moving forward?
Yes and no. I think you need to look at it this way, okay? For robo-taxis to work, it's a combination of hardware and software that has to work. We see this now every day in Santa Monica with Waymo. So Waymo has an operating robo-taxi service where I live, and it's working very, very well. And if you look at the amount of hardware that's on a Waymo car compared to a Tesla, it's vastly different, where the software that Tesla's been developing is really doing the heavy lifting. And right now, the software just doesn't work. So, you cannot get across LA in a Tesla on full self-driving. It just doesn't work. And most of the critical interventions would be to avoid an accident. So until that happens, it doesn't really matter whether the regulators approve it or disapprove it. If it's running people over, people are going to take them off the roads. And so it has to work. I can tell you, I can use it. I use it every day. It doesn't work yet. I'm super frustrated about it. It's been like 4 or 5 years I've been testing self-driving software, or we've been told it's going to be done. I just sold my third Tesla with full self-driving that I've paid for 3 times, and it's never fully worked. So I think that's the issue, right? Like if you turn on your computer, it doesn't work. So that's what Tesla needs to solve, and that's the only thing that's important in my mind that Tesla is focused on right now, because they don't care about selling cars anymore.
So Ross, what do you think the degree of that downside risk looks like for Tesla?
It's really a valuation risk, because you've got earnings estimates going into next year in the mid $3 range, $3.20. And then you say, well, does it deserve 100 times earnings? It's like NVIDIA trades at 40 or 35 times earnings. And that is up to the market to decide. It's not really up to me to decide. I tend to buy stocks based off a valuation that is based off actual numbers, not like just hope. So there's a hope premium in Tesla that might be like worth several $100 billion. And not to say it's not worth that. That's what I'm saying. It's like people's perception of the future of Tesla might be better than the future perception of what NVIDIA is, maybe. But when I value it based off the way I value stocks, I still think the stock is wildly expensive, and that's where I'm at,
All right, Ross, thank you so much for joining us. As always, we appreciate it.
Thank you.
Now, coming up, we're honing in on the outlook for the housing market following those election results. That's next, right here on Catalysts.
Wall Street reassessing its outlook for Fed rate cuts this morning following Donald Trump's victory. Nomura now seeing just one Fed cut in 2025. While Charles Schwab's Lizanne Saunders tweeting out this morning, quote, "It wouldn't surprise me if probabilities for a December cut move lower." Here to discuss that and more, we want to bring in Brad Case. He's the chief economist at Middleburg Communities. Brad, it's great to have you back here on Yahoo Finance. And I think the big question, at least in terms of Fed expectations this morning ahead of the decision that we're going to get tomorrow, is it going to take more time for the Fed to adjust policy? What do you think?
Well, I think so. I think the economy, as your viewers know, has been strong and resilient for several years. And it's still, I think, too strong to justify significant rate cuts. However, the FOMC members have said that they do think rates should be lower. And so it's possible that they will continue lowering rates, but increase their quantitative tightening policy, their balance sheet management, which will really have the same result as tightening rates in terms of pulling back on consumption and in particular investment.
So then, Brad, does that mean that the markets could sort of do the Fed's job for them in that sense?
Well, I mean, I think there are, if you think in particular for the housing business, which is what I'm in, if you think about what it takes to provide housing and address affordability issues, there are really four components. One of them is construction costs, materials costs. And there's concern that those may go up again. We may have inflation in the cost of building materials. A second component is construction labor costs, and there's concern that those could go up again. We could have inflation in labor costs, specifically for unskilled labor. The third is financing costs, and that's what the Fed affects most directly. But a component of financing is the concern about ongoing inflation, and that's what I think. There is a risk of reigniting inflation. And the fourth component for rental housing is operating costs, especially insurance, and that's going to continue to be a concern, especially with increased climate-related damage.
Brad, do you see the cost of housing, I guess overall, and factoring in all those factors that you just listed there, do you see the cost of housing then going up under Trump?
I do.
To what degree?
I think that if it doesn't, then the reason it won't is because of an increased concern that house prices may decline. They're so inflated right now, and so when we talk about affordability, we talk about sort of how to get out of this affordability problem. The way to get out of it is to increase supply, but of course that could have the effect of reducing house prices. And if people who are thinking about buying a house are concerned that the value of their asset may go down, then that may actually cause the value of the house to go down. So that's a risk going ahead. We haven't had a significant decline in house prices since the great financial crisis, and I hope we're not going into something else like that. But when we see how inflated house prices are right now, and when we see that the possibility of addressing the problem through greater construction is just difficult, I think there's a real risk that a downturn in house prices may be in our way.
Brad, do you see a real plan from Trump or who could make up his team? Do you expect, it hasn't sounded like it so far, that housing affordability is going to be a top priority? And then if it's not, then what that says just about the extent that we could see in terms of the uptick of home prices?
Yeah, it hasn't been a major focus of his campaign or really either campaign. And it's important to remember that the solution to housing does not come from the federal government, even from the Federal Reserve. The solution to housing issues comes from state, but especially local governments. And so if we have local governments and state governments encouraging them to make more provision for the supply of housing to increase, that's really what's going to make the difference. We simply are in a cycle in this country where people want to move out from their parents' basement. They want to move out from living with their fraternity brothers. And so they want to form their own households, and we just have to be able to provide housing for them. We have been in a housing shortage for about a decade now, and I don't see any sign that it will stop.
I was about to ask you, Brad, for any sign of optimism about the housing supply. issue, but I guess you kind of answered that question. I mean, I've heard from people who had started to rethink their own savings because they thought they maybe could be able to afford a home if Harris were elected, given some of the potential policies around increased housing supply, credits for first-time home buyers. Is there anything, even at the local level, that you could tell those potential first-time home buyers who might be concerned about any path forward for homeownership?
Well, it's actually important to remember that buying a house, financially speaking, is not really a good move. Financially speaking, you're better off putting your down payment into investments. On the other hand, right now the stock market is also very richly valued. So I wouldn't suggest people sort of force themselves into home ownership because they think it's going to be a good investment. You buy a house because that's where you want to live, and you can't live in it without buying it. So I think nationwide, what we're going to continue to see is more movement from basically the Rust Belt part of the country to the Sun Belt part of the country. And it's important that we build housing, both rental and for sale housing, in the places where people want to live. And we certainly continue to see companies wanting to move to that part of the country, especially when they are not benefiting by having people come into a big office building downtown every day. They would rather have people congregating in a city that they want to live in, which is to say the Sun Belt areas.
All right, Brad, thank you so much. Really appreciate you joining us this morning.
It's always my pleasure.
Coming up, we're going to be joined by E.J. Dion, Brookings Institution Senior Fellow in Governance Studies, to discuss the latest on that 2024 election. We'll be right back.
The task before us will not be easy, but I will bring every ounce of energy, spirit, and fight that I have in my soul to the job that you've entrusted to me. We will make America safe, strong, prosperous, powerful, and free again. It's time to put the divisions of the past 4 years behind us. It's time to unite.
Before his official win was announced, Trump stressing unity in an address to supporters in Palm Beach last night. The former president's victory was made possible in part thanks to strength in battleground states. And as of this morning, Trump is projected to win 7 key swing states. Of those, Trump won only one of them in 2020, and that was North Carolina. Joining us now for more, we've got E.J. Dion, Brookings Institution Senior Fellow in Governance Studies, also a columnist at The Washington Post. E.J., it's great to have you on this morning. We didn't know what this election result was going to be, and I know that you didn't necessarily know it either. What happened here? What did the polling get wrong, and what did the consensus view going into this election get wrong?
In the interest of truth and punditry, I got it wrong. I did not expect this outcome. In fact, the polling did pretty well. The polling showed the kind of numbers we saw quite consistently. And I think in retrospect, it's easy to say in retrospect, there were a bunch of numbers staring us in the face that help explain what happened. The Republican pollster Whit Ayers, in presentations he was giving before the election, showed a slide that had 3 numbers on it. One was the average inflation under Trump and Biden, 1% under Trump, 5% under Biden. Interest rates, Trump and Biden, 3%, 6%. Market basket of food, $100, $125. All of this was not economic, but I think that these inflation in particular and this general unease about people's living standards, the cost of living, explained a lot about how Trump won. 67% of the people in the exit poll said that the economy was not so good or poor, and they voted by better than 2-1 for Trump. And so I think despite the fact that by so many of the numbers that you guys talk about all the time, we have what the economists called, the envy of the world economy in the U.S. right now. There were a lot of people out there who weren't feeling that. And we're going to have big debates after going forward about, was Trump's ad against trans people very effective? How much did immigration play in this race? And all those things are true. But I think there was just a set of underlying facts that made it very hard for Harris to penetrate. The other was attitudes toward President Biden. Some of us think he actually has done a good job as president. The American people clearly don't think so. In the exit poll, 40% approved his performance, 58% disapproved. Those are very hard numbers for an incumbent vice president to fight, it turns out.
So, EJ, moving this forward, talking about the fact that inflation, the economy seemed to be a deciding factor, was a deciding factor for many voters this past election. Looking ahead, 2 years from now, 4 years from now, how does the Democratic Party then, I guess, change the messaging surrounding that, given the fact that they weren't able to mobilize the base that maybe they thought they were going to, given what you were talking about, that a lot of the numbers on the economy were still quite strong?
I think they're going to be, first of all, Democrats are very good at recriminations, and we're going to see a whole lot of that going forward. I think you can go back a couple of years in the Biden administration, they tried to sort of brag about Bidenomics and talk about the good things it did. I think that campaign will, in retrospect, and I thought it might work at the time. So again, I don't want to pretend to be all-seeing on this, but it didn't work very well. And I think they needed to join the economic argument in a different way earlier on. I think that Harris tried to show the risks of the Trump economic plan, in particular, the risks of the high tariffs he promises, the risks of mass deportations, put aside how inhumane that could end up being and the importance of resisting, sweeping expulsions of people like that. could have a very negative effect on the economy by reducing the size of the workforce. I think that Harris tried, but in retrospect, they should have done a better job of highlighting those risks. But I think it was just a significant part of the country that was in an unusually sour mood that Trump's advertising, I looked at a reel of Trump's advertising over the weekend. They were very effective in stoking and taking advantage of discontent out there. Trump did not run a very disciplined campaign himself. His advisors ran a heck of a disciplined media campaign.
EJDN, unfortunately, we have to leave it there. Thank you so much for taking the time to join us here this morning. It's Brookings Institution Senior Fellow in Governance Studies and columnist at the Washington Post.
Great to be with you. Thanks.
Thanks, EJ. Coming up, we are diving into the Fed meeting and the Fed's incoming rate decision that's happening tomorrow. Stay tuned. You're watching Catalysts.
The FOMC meeting kicking off today with the committee's rate decision coming in tomorrow at 2 p.m. Eastern. As of this morning, investors largely expecting a 25 basis point cut still. But the election outcome poses a question for the Fed moving forward. Could inflationary policy from the White House put the rate cutting cycle on hold? Here to break that down, we've got Gina Smilik, New York Times Federal Reserve and Economy reporter. Gina, it's great to have you with us this morning. So that's where I want to start. Where is your head at in terms of what the election outcome means for the Fed's path forward?
Yeah, I think it actually injects quite a few questions into the sort of outlook for rates going forward. I think that we know that the Fed has set up for a rate cut this week. markets are widely expecting a quarter-point rate cut tomorrow at the Fed's meeting. But I think after that, there could be a lot less certainty. Former President Trump, now President-elect Trump, has suggested several policies that could really matter to the inflation outlook, including really big tariffs that could feed into higher prices, including things like restrictions on immigration that could sort of feed into both wages and prices, depending on how they're implemented. And so I think that could pretty fundamentally shake up the outlook. If the Fed is looking at a world with higher inflation next year, they may not be able to cut interest rates as much.
Gina, from the conversations that you're having with policymakers, I guess, how do you think this changes the tone of the meeting today and tomorrow, and maybe the rhetoric or the message that we're going to be hearing from Powell?
Yeah, so I think we haven't heard from policymakers since this happened. Obviously, they are in their blackout period ahead of the Fed meeting. But what we do know is Fed officials in recent months and in recent weeks have been really closely focused on the inflation outlook as they think about what happens next with interest rates. They've also been really focused on the job market outlook as they think about what happens next. And so I think they're still going to be weighing those two things. It's just that equation might have shifted a little bit. And so if they see a world that's a little bit more inflationary, if they see that as a real and salient risk, now that President Trump has won election and now that there's a Republican Senate that will potentially pass some of his policies, I think you could see that shift Jay Powell's message and make it a bit of a warier one. And so we'll all be watching out for that tomorrow.
Gina, real quick, what do you think the read is, or how closely they are tracking those inflationary risks now?
Extremely closely. I mean, I think inflation has come down a ton. Inflation is almost back to normal, but it's not completely back to normal. On a core basis, it's still above the 2% goal that the Fed shoots for over time. And so I think that they are very alert to the possibility that in an economy this strong, if you do anything that sort of gooses it, if you do anything that pushes up prices, there is a risk that you could have an inflationary situation, and they need to be ready to react to that.
We know the Fed's very data dependent. I wonder how you're thinking about when we could start to see this election showing up in the data at all, with something like consumer sentiment, maybe even hiring ticking up, if there is sort of an optimistic view on the path forward for the economy and what that might mean for the Fed moving forward.
I think those things will probably take time. I think the really big things that could potentially matter and that could be more level set is we might sort of get some clarity on what's going to happen with trade as it becomes clear what's going to happen with tariffs. I think that's something that you could see sort of not necessarily impacting actual inflation, but certainly impacting the outlook for inflation. And I also think that you could certainly see it in markets. We're already seeing it in markets. Markets have reacted strongly to this decision, and you're seeing markets sort of anticipate both higher inflation, but also, at least in the case of stocks, a slightly sunnier outlook. And so, I think there are multiple places where this could show up.
I want to ask about one specific Fed member, and that's Michelle Bowman, who you've written about extensively. She was the lone dissenting voice when the Fed did vote to cut by 50 basis points, and she is conservative. I wonder what you're thinking, if you've heard anything from sources about the potential for her to become a bigger part of Trump's sphere of influence moving forward, potentially even playing a role in his administration.
Yeah, so I think that the consensus is that she's definitely positioned herself to be a contender for vice chair for supervision. The vice chair for supervision role will expire in 2026, and so Trump will have a chance to replace that person. She's by no means the only contender for that role. I think we're also looking at a world where there are people like Christina Paragon-Skinner at the University of Pennsylvania who would potentially be up for that. So not a shoo-in, but definitely someone to watch as we get into sort of the sweepstakes of who takes the big jobs at the Fed.
Gina Smilek, New York Times Federal Reserve and economy reporter. Thanks so much for taking the time to join us here this morning. Let's do a quick check of the markets. Almost 90 minutes into the trading day, you're still looking at gains, broad gains across the board. The Dow up just over 3%. You've got the Nasdaq tucking on a 2% gain here this morning in the early reaction to President-elect Trump's victory here overnight. You have the S&P also moving to the upside, well above 5,800, just shy of 5,900. Keep it right here on Yahoo Finance. Coming up, it's Wealth, dedicated to all of your personal finance needs. Brad Smith has you for the next hour. Stay tuned. We'll see you tomorrow.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Today, we continue our rolling coverage of the 2024 election. Former President Donald Trump has been elected 47th President of the United States, defeating Vice President Kamala Harris for the leadership mantle. The Republican Party has flipped control of the Senate, with Democrats losing 3 seats. Control of the House of Representatives is still in process of ballot counting across over a dozen states. Leadership in the executive and legislative branches were not the only things on the ballot here, though. Americans cast votes on issues ranging from healthcare to immigration, housing, and the minimum wage. But the number one issue voters said was most important in 2024, the economy. 39% of the electorate surveyed by the AP vote cast, naming it as the top issue, and that's up over 10% from 2020, when the biggest issue for voters was COVID-19. On today's show, we're going to dig into what a second Trump presidency means for your personal finances. We'll discuss how you can think about your investment strategies, what plays you may want to consider, and the sectors and asset classes that could benefit from a Trump presidency. Plus, we'll discuss what Trump's proposed tariff plans could mean for inflation and your spending power. All that and much more. So let's get into it. Donald Trump defeating Kamala Harris to win the 2024 election. The former president performed well across battleground states and rural areas, improving on the 2020 performance in nearly every small red country and county across Georgia and North Carolina. To discuss, we're joined by Yahoo Finance's Rick Newman and Ben Werschel. Great to have you both here with us to help us break this down a little bit further. And so as we're just thinking of the overall reaction here, Rick, what does this kind of signal to you from what we've seen ultimately, just to begin some of the balance of power that's still yet to be netted out fully here?
Well, if we want to talk about one of the things that investors care about most and consumers, it's those 2017 tax cuts. And just to remind everybody, the tax cuts for individuals were temporary. They expire at the end of 25, at the end of next year. All of the business and corporate tax cuts were permanent. So there's this huge question, what's going to happen with these tax cuts that expire at the end of 25? And Kamala Harris's position and Democrats' position in general is let all the tax cuts expire for people earning more than $400,000, call it $500,000, while the tax cuts remain for what you would call more typical Americans earning less than that. So if Democrats keep the House, let's call that a 50-50 prospect, they will have some leverage to do that, to let the tax cuts for wealthy Americans expire while they stay in place for everybody else. If Republicans win the House, I think they're just going to, very likely to just extend all the tax cuts for everybody. So tax rates basically remain the same. The big secondary issue there is that means a big increase in the deficit, and we will be talking for years about the implications of that.
Yeah, and Ben, you
one additional
about to add on.
On the Republican sweep scenario, I think is important for our audience is timing. If Republicans sweep, they use a process that's called reconciliation. I won't get into the weeds of it, but it basically means Republicans can move fast and move on their own. So if Republicans control the House, Senate, and the presidency, they can do it on their own, and they've talked about doing it in Trump's first 100 days. So if it's a House that's controlled by Republicans, they have a lot of leverage to move quickly. Again, if it's a Democrat, this is an entire year-long debate with bipartisan back and forth that goes all the way probably to December. So
yeah, and that was something we were talking about earlier as well, just what would be prioritized within those first 100 days. Of everything that was campaigned on, what do you think is most likely for Trump to really begin kind of going down his checklist on?
I think tariffs will be big in terms of economic issues. That is what Trump talks about all the time. His people have made plans. There's these old laws from the 70s that could give the president more power to levy tariffs than even Trump did in his first term. They're talking about them. They're thinking about them. So I think that's going to be an early one. Immigration is another big one. He's talked about massive deportations. I think he's going to make a big effort in that. And then I think a lot of it is depends on this balance of power. If they do have a unified thing, they're going to have a big legislative agenda they're going to try to get done really quickly.
There's the balance of power, but then there's also the makeup of your cabinet. Who are the voices that you're listening to and surrounding yourself with? What are your anticipations for how that's shaping up?
Well, I mean, I think the most important thing there is that Trump's billionaire buddies are going to be in charge of much of this agenda. And I don't think many of them are actually going to be appointed to cabinet positions. I mean, one exception could be John Paulson, the hedge fund guy, who basically is lined up to be the Treasury Secretary. But you've got obviously Elon Musk, an example, Peter Thiel, the other example. They don't want to take jobs in the government. They want to sort of install other people they can control in jobs in the government. And Musk, of course, wants to reorganize the government and cut the huge federal bureaucracy. I don't think he's going to have a chance of doing that. They care a lot about tech policy, hands off the big tech companies, no regulation. They care about antitrust, just let all the mergers go through. And we're going to be talking about this a lot, but just to go back to this really important pocketbook issue, if people don't know this now, I don't know how they couldn't know this now, but higher tariffs mean the cost of products goes higher. Somebody pays more for those products, and in all cases, the importers or the producers or whatever, they always pass on as much of that added cost to the end user, you, the consumer at home, as they can. And that is driving a lot of what we're calling the Trump trade right now.
Rick and Ben, thanks so much for taking the time here with us today. Of course, viewers can catch Ben, Rick, and Rochelle Akufo in their podcast, Capital Gains. The new episodes are out every Friday, 12 p.m. Eastern, across all podcast platforms. Well, let's take a look at where stocks are trading right now. We're seeing green pretty much across the screen here. Take a look at the major averages popping on former President Donald Trump's victory. We want to dig into how you should think about your investment strategies for a Trump presidency. Here with more, we've got Arup Datta, who is the head of global quantitative equity at McKinsey Investments. Great to have you here with us, Arup. So first and foremost, as you think about your investment strategy post-elections, what more broadly can perhaps be applied across any election scenario, and what makes this one different?
Absolutely. Thank you for having me, Brad. My pleasure being here. I continue to be sanguine about markets. That's how I've been for the last couple of years. It's no different today. Obviously, the markets are running, as you could see. Small caps leading the way currently. So my view on being positive on the markets remain, and that's playing out today. I've also looked at, how markets have behaved based on election results in different parts of the world. And I would say US is the one market perhaps where the president or a new president or a new election plays less of a role about the long-term returns for the markets than it does in some other markets. So therefore, I continue to do what I like to do best, which is try to be very all-weather core in terms of how I invest my money.
What does that mean for folks who have perhaps dove headfirst into the Magnificent Seven, for instance, and really over-allocated or overweighted their portfolio in that investment thesis?
So I'll answer both of those. All-weather core to me is you have all styles embedded in your process, which means you have value in your process, you have growth in your process, you have quality in your process. And I try to keep my life simple, because I can't always predict which style will be in favor today, tomorrow, or the next 6 months. So having all the three styles in my process where my portfolios have positive value, positive growth, positive quality biases help me out in terms of navigating different market environments, which has really served me well the last 6-7 years during so many massive macro events going on here. So that's one thing, has always I focus on. I would say about the Magnificent Seven, that's always been the talk of the town the prior 18, 21 months. My view is, again, I would like to pivot a little bit away from that, not a lot, but a little bit away, because my view is as the Fed starts cutting rates, it already has, another one likely to happen this week. In this situation, historically, value has performed well. We haven't seen that yet. So far, the last 21, 22 months, last year, this year, growth has led the way. Usually, as Fed starts cutting rate, value starts leading the way. So I would say one needs to take those into account. Usually, value starts leading the way. Small caps have a better time. So therefore, what I've been telling investors is, you may have done very well by yourselves by picking M7, the Nvidias of the world, but going forward, at least balance it out. Load up a bit more on US small caps, perhaps somewhat internationally.
Arup, just lastly, while we have you here, and we were talking about the Mag 7, of course, NVIDIA, one of the major names within there. That is one of your top picks. What are the other top picks that you are looking towards as we see a shift in the balance of power, or at least the powers and the heads within Washington, D.C.?
Absolutely. As I said, I balanced my portfolio. So I have NVIDIA based on its growth metric. It still ranks very highly. That's why we own it. But the other two picks I'll highlight is Comerica. That's actually a value pick, a mid-sized bank based out of Dallas. And the last one I'd like to highlight is Norwegian Cruise Line, which everyone knows is one of the major cruise providers. And both of those, there are different reasons. So when we're looking at banks like Comerica, we emphasize value more. And Comerica looks very cheap on many measures like price to book and dividend yield. For Norwegian Cruise Lines, both value and growth seem to be good support. They had a blowout print a few days back. Cruise demand is very high. At the same time, the stock is cheap on measures like price to cash flow. So again, my portfolios will include names like NVIDIA on one hand, Comerica on the other hand. That's where the all-weather core approach.
All right, Arup Datta, who is the head of global quantitative equity over at Mackenzie Investments. Thanks so much for taking the time.
Thank you.
Certainly. Well, Bitcoin surging today after Donald Trump wins the presidential election. The cryptocurrency briefly topping $75,000. Here with me now, we've got Jason Janowitz, who is the Blockworks co-founder. Jason, thanks for joining us in studio.
Brad, good to be here.
Absolutely. So let's talk about this. What ultimately does a Trump win and victory mean for the industry?
I think there's a couple ways to look at that. There's looking at it from the builder perspective of folks in the industry, and then there's looking at it from the way of investments. So from an investor perspective, I mean, the market has responded well, right? Bitcoin shot up 7%. Bitcoin hit an all-time high overnight last night. Coinbase is up 20%. So the investors are clearly responding pretty well to this news. I think almost the more important thing, and zooming out on a longer term time horizon, the most important thing that the industry has been requesting from founders like myself inside of the industry is more clear regulations and more clear guidance on how to actually build a crypto company in the United States. And that's, I think, the thing that I'm the most optimistic about.
Do you think that the SEC chair needs to change then for that to happen?
I think the SEC chair definitely needs to change.
And so who are the top candidates? Who are the top profiles that should even be floated around with regard to that if we were to see that come to fruition during a Trump presidency?
Yeah, I think it's less important about the specific SEC chair and more about the things that they will do. So if you talk to founders in the industry, whether they're running different exchanges, custodians, layer ones, whatever it might be, the most important things are clear regulation of stablecoins, clear regulation of the exchanges and custodians. Folks want to bring Bitcoin mining back into the United States. It's been pushed overseas into places like the Middle East. And we need clear regulation around how to actually launch and grow a token-related business in the United States.
What type of consumer protections should that also entail as well? If we were to see not even just holding of crypto as an asset, but also even utilization of crypto even more so as a form of currency as well?
I think, well, getting away from the cryptocurrency as a currency, because we do have stable coins and we can touch on that, but I think the thing that has become apparent is that crypto used to become this thing that maybe we had to protect against insane volatility. And even if you thought about the crypto voter or the crypto holder, maybe it was mostly males, young males who are perpetually online. Now what's clear from this election is that the crypto voter is all Americans, right? There are about 55 million Americans who hold crypto. And the thing that's clear from this election is that they showed up, and they showed up, they spoke loudly. We elected over 220 pro-crypto candidates to both the House and the Senate. So going back to your question around what protections there should be, I think it's similar to, I mean, what does it look like to hold equities and stocks, bonds, currencies, commodities? It's very similar because it's clear that crypto is now one of the biggest asset classes in the United States.
Give us the pulse check of other crypto founders right now. I mean, I don't know if there's a group chat that you guys have or a text thread or whatnot, or maybe it's just IG DMs or something like that. But what are you hearing from other founders right now, and specifically in how they look to scale up their businesses?
So the worst thing that happened in the last couple of years for crypto founders is after FTX blew up, I think the SEC and the regulators mistook FTX for the broader crypto industry and ecosystem. So they came down really hard in 2022 and 2023 and 2024 earlier this year on the founders specifically. And what that actually did is it pushed the founders overseas. So if you look at a lot of the founders in the industry, they moved to places like Dubai and Abu Dhabi and Singapore. So if I'm the regulators, I'm the SEC, the CFTC, this new administration, the House, the Senate, the thing that I probably care about the most is trying to say, hey, look, there are two of the biggest industries in the world right now, AI and crypto. AI is clearly being grown in the United States with Microsoft and Facebook and Amazon. How can we make sure that crypto is the same thing? Don't push it overseas, bring it back to the United States.
And just lastly, while we have you here, I mean, as we're hearing so many of the bullish calls, not even just going into year end, but even looking into 2025 around crypto, you know, a day like this, of course, we're looking for a larger trend that would push us to some of the lofty valuations or lofty calls for $100,000 a coin. Where do you see this ultimately and getting to with some of the momentum that we have seen prior election and now, of course, another infusion of momentum post-election?
Really good point. I think this election actually matters a lot less than people think that it does for the digital asset industry. If you zoom out and look at it from a macroeconomic perspective, the US has $36 trillion in debt. We're growing at about $1 trillion in debt every 100 days. So the way that you get out of that is you inflate your way out of that. And so the things that look really exciting to an investor today are Bitcoin, it's gold, it's commodities, it's the Nasdaq. It's definitely not fixed income. So I think when you zoom out and look at it from a macro perspective, it's a good time to get excited about risk assets and specifically hard commodities and things with fixed supplies.
Jason, thanks for the perspective here on the day. We're going to continue to track BTC-USD. Thanks.
Thanks, Brad.
Jason Yanowitz, who is the Blockworks co-founder. Coming up, everyone, we dive into how small caps will perform under a Trump presidency, and we've got a quick programming note for you as well. Be sure to save the date. The 2024 Yahoo Finance Invest Conference, November 12th, starts at 8:30 a.m. Eastern Time. We've got some of the best and brightest minds across various industries, all under one roof. You don't want to miss those conversations.
Are you a passionate investing bull? Maybe you love scooping up shares of NVIDIA on every single dip because, well, AI is changing the game. Fascinated by PE ratios and how the presidential election outcome may impact them? Then come one and come all to the 2024 Invest Conference. Huge power players all under one roof. Thought-provoking discussions on November 12th at 2nd in New York City. We can't wait to welcome you to Invest 2024 live, Yahoo Finance all day.
The Russell 2000 Small Cap Index rising today, up over 4% on the back of former President Donald Trump's White House victory. So will small caps continue to outperform? And should you add them to your portfolio? That's the big question. Joining me now, we've got Francis Gannon, who is the Co-Chief Investment Officer at Royce Investment Partners. Good to have you here with us. What is the thesis now around small caps now that we are putting the election behind us and the market's reacting to a Trump victory?
Good morning, Brad. Thanks for having me. I think the thesis is the same today as it was yesterday. You know, small caps have been out of favor for a period of time. In fact, November 8th, which is Friday, will be the 3-year anniversary of the peak in the Russell 2000 back in 2021. And it's hard to believe that the 3-year return for the Russell as of this morning was actually negative over 1%. So the thesis from our perspective is perhaps enhanced with the outcome just because we know what might be happening, which yesterday we didn't. But the outcome here, to me, is just going to help small caps a little bit, especially on the earnings front. And I think the earnings story is going to be a powerful part of why you want to be part of the small cap. I hate to say it revolution, but in a way it is a revolution here going forward just because we've been so out of favor for such a long period of time.
When you have candidates campaigning on specific types of advancements that they want to bring to an economy or a sector specifically, and really focusing in on that, it certainly seems like in that instance, all small caps wouldn't be created equal necessarily. So are there certain sectors within small caps that could be set to outperform relative to the rest of their peers?
Yeah, sure. I think part of the small cap story is that many of the trends in place yesterday, even before the election, are going to continue. So reshoring, for example, is a national thing that we're going to see more and more of going forward. And that is clearly going to benefit small cap companies. And I think what the market has missed over the past several years is that there are enormously innovative companies in the middle of the country that do phenomenal things that the market is just not priced or overlooked for. So I would say focus on the more economically sensitive areas of the market, industrials, machinery type businesses. Don't be afraid of information technology, but you don't have to focus on the sexy part of technology, you know, anything around AI, for example, or even software companies. And at the same token, within the financials, don't be afraid to focus on some of the capital markets businesses. I think one of the things you probably will see going forward is increased M&A activity, and many of the advisory firms are going to benefit from those trends. So there's a lot of ways to be playing what could be a more American-focused, you know, set opportunity over the next several years, given the who's now occupying the White House, and I think that can benefit and play in a variety of different ways within the small cap space.
You know, as you mentioned that, and you know, I'm going to try to squeeze in two questions here. The first one, of course, as you were mentioning, focusing on American-focused small caps, how might we see the risk or the impact of tariffs flow through to small caps as well?
Well, small caps have been dealing with tariffs for a period of time here, right? Tariffs have been in place for the past 8 years. So increased tariffs obviously will affect them. But what I think people miss sometimes about small caps is they have the ability to pass along pricing, right? Most small cap companies are part of, so for example, their business is part of a bigger business. Or their product flows into another machine, et cetera, that is critical to the outcome of that business or machine. And so I think they have the ability to pass along pricing. So I'm not really concerned about the tariff story from a small cap perspective.
Francis, just lastly, while we have you, to what extent should investors be prioritizing profitability within their small cap plays, i.e., looking at an S&P 5 or S&P 600, with the profitability filter versus a Russell 2000?
Yeah, I'm a big fan of quality at the moment. I think quality is how you have to position yourself within the small cap space. To your point, the Russell 2000 at the end of the third quarter had one of the highest numbers we've seen in a non-recessionary period of non-earning companies, over 44%. So focusing on those companies that actually have earnings, that are profitable, that don't necessarily need access to the capital markets from a debt perspective or a leverage perspective, I think will clearly help investors over the next several years. I don't know what the Fed is going to be doing for the remainder of their tomorrow or going forward. But those companies that don't have to worry about rates coming down, I think is going to be very significant for how they're going to be able to operate in this environment.
Francis Gannon, who's the Royce Investment Partners Co-Chief Investment Officer. Thanks so much for taking the time, Francis.
Thanks. Great to be here, Brad.
Well, voters in Arizona and Massachusetts weighing in on wage changes for tipped workers. Yahoo Finance's Rochelle Akufo is here now with a look at the results. Hey, Rochelle.
Always good to see you, Brad. A busy day indeed. Now, we saw that Massachusetts voters rejected increasing the hourly wage for tipped workers. Now, it's question 5 or the one fair wage on the ballot, and that would have increased the minimum wage from $6.75 to $15 an hour over the course of 5 years. And also, Arizona voters overwhelmingly rejected Proposition 138, and that would have allowed tipped workers to be paid 25% less than the hourly minimum wage. That's only if their tips bring their overall earnings to $2 above the minimum wage. So lots of different math to work out there, but clearly rejected in both Arizona and Massachusetts.
And so President-elect Trump and Vice President Harris, they had embraced the idea of making cash tips tax exempt to help low and middle income workers. And a number of bills had been proposed. How much of a difference could that make?
And we know that was very popular, and I'm going to give you the answer that all economists give, which is it depends. So Yale University's Budget Lab, they found that only 2.5% of the workforce work in tipped occupations. So most of the US workforce wouldn't even benefit from it, and it would also lower state income tax revenue. Now that typically goes to fund key services and things like education, healthcare, transportation, and low income assistance. So essentially helping the very people who would have benefited from this. And another thing is it does open the door to how the IRS would define cash tips. For example, would it mean that if you got a bonus at work in cash, would that count? So a little bit to work out there. And so that also brings in this concern about fairness and abuse of the system. And important to note that even if states at some point decide not to tax tips, employees and employers are still subject to federal tax laws. So think your federal income tax, Social Security tax, and Medicare tax. So either way, you're getting taxed.
Yeah, exactly. Rochelle, thanks so much. Appreciate it.
You're welcome.
Let's turn now to Yahoo Finance's Jared Blickery for a look at markets around 2 hours into trading day here. Jared.
Yes, Brad. Well, I'm looking at the Dow. It is up over 1,000 points. In fact, 1,317 points. I haven't seen a number north of 1,000. That'd be 4 digits in some time. 1 comma, by the way. And that is the biggest jump in a year. And the Nasdaq is also at a record high. So is the S&P 500. And we can take a look at the Russell 2000 as well, which is even more impressive. That is up 4.5% today. Let me just show you a multi-year chart. This is going to be a 5-year chart. Candlesticks. I'll put some lines so you can see it a little bit better. We are right back up near the record highs that we had way back in 2021. So it has been a long time coming, lots of false breakouts, but now finally at that moment, might consolidate a bit. It would be normal to digest the move and then head higher, but sometimes you just head higher. Now, of course, you can also head down. This could be a giant fake out, but it just seems that is the less likely scenario here. Want to check out what's going on in the bond market. We are at a 4-month high. Here's a year-to-date look. And we had already traversed quite a bit, and now we are going even higher. So this has implications for Fed rate policy, what the bond market is expecting the Fed to do. Maybe not as many interest rate cuts in the future as we thought. In fact, those expectations have been going down. So that's a very important trend that we're going to be keeping an eye on here. And here is today's sector action. Now, not everything is in the green. You're going to see some stuff in the red, but these are defensive sectors. Utilities, staples, real estate, arguably very interest rate sensitive, not liking those higher rates. But look at what does. Financials up 5.3% to a record high. We also have industrials at record high, communication services. Most of the sectors on the top row, in fact, all of them are up 2% or more. So this is just a very risk-on day. We also see this in our leaders. We're not seeing a big turnaround for cannabis today. In fact, we're seeing a lot of those stocks down. Solar energy also down, Korean stocks down. But for the most part, it's a lot of green. Regional banks up 11%. Bitcoin, haven't even talked about crypto just yet and all the accompanying crypto stocks. Bitcoin at a record high, up 6%, 74,000. I don't think we might have hit 75,000 in here. That's just one of those big round numbers. Finally, I want to leave us on a little red. Not everything is green. China, clearly, that is a Trump play. That is in the red mostly for today.
Jared, thanks so much for the breakdown. Appreciate it as we are 2 hours into trading. Coming up on Wealth, election-proof ETFs that will benefit regardless of what administration, of course, is there in 2025 after former President Trump won last night and this morning the race called. We'll get into that on the other side. With President-elect Donald Trump set to take back the White House, there are certain industries that investors expect to benefit under his administration. For example, financial stocks may get a boost from a Trump administration as he eyes banking deregulation. One of the ways investors can take advantage of these sector-specific bumps is ETFs. For more, we have Todd Rosenbluth, who is the head of research at TMX Verify, as part of this week's ETF report brought to you by Invesco QQQ. Great to have you here in studio with us, and thanks for taking the time, Todd.
Of course.
So let's talk about this a little bit more, and let's start perhaps there on the banking sector. Where are some of the ETF plays that you imagine investors would be apt to at least see where there is component leaning towards deregulation and the biggest beneficiaries of deregulation?
Right. So there's the Financial Select Sector Spider ETF. The ticker is XLF. That's the largest. That's the S&P 500 financial stocks diversified across industries. So it has banks, insurance companies, brokerage firms. That's a logical play for many folks, but we are seeing interest in those more targeted industry-oriented ETFs. So the Invesco has a bank ETF. The ticker is KBWB. And so you're going to get more concentration into the multinational banks as well as the regional banks. with exposure there. And then you can even target specifically the regional banks. I think KRE is actually, as you showed earlier, one of the better performing ETFs today. That's a SPDR S&P regional bank ETF. You're going to have more exposure to some of those smaller companies. So if deregulation happens, the financial sector is likely to benefit, and there's always an ETF or three to get exposure to.
Now, on the other end, we've also been hearing, of course, campaign talk on the road to reclaiming the White House from President Trump about rolling back some of the Biden administration policies, whether that be in chips, whether that be in other clean energy investments that have been made. So where are some of those ETFs that investors are perhaps already positioned in or keeping tabs on that they would be apt to perhaps, all right, put on the back burner for right now?
Yeah, so clean energy is an area that I think people were leaning towards and looking towards. And so there's a number of those clean energy ETFs. Interestingly, clean energy ETFs and the solar-related ETFs actually did quite well under the prior Trump administration as opposed to the Biden administration. But we do think energy is going to be in focus, and so the energy sector in particular, and so drilling, exploration and production companies, XOP is one of those larger, equally set up, equally diversified across small and mid-cap companies. And actually, one of the better performing ETFs in the energy sector is the Alerian MLP ETF. The ticker is AMLP. AMLP has actually been outperforming the broader sector. It's focused on midstream companies, higher quality, free cash flow oriented companies. And so that's probably a good place to invest, and you don't have any exposure to S&P 500 companies. MLPs just are not part of the S&P 500.
Yeah. You know, one of the other things that's been in focus, and that we've had a few conversations over the course of, several conversations over the course of this morning about, is the roll-off of the 2017 Tax Cuts and Jobs Act and where that needs to be renewed. And depending upon where the House of Representatives ultimately comes in at, it could look like a red sweep or carte blanche for President Trump to really go about day one trying to make sure that that gets highly prioritized. We know previously that had led to massive corporate buybacks. Could we see the same? And if so, are there any ETF plays out there?
So we certainly could see the same. Companies tend to use their cash to support their own business and buy back stock, their free cash flow. So Invesco has a buyback ETF. The ticker is, I believe, PKW is the ticker on that one. And so it owns companies that have been buying back their stock roughly 5% over the last 12 months. So that's, again, a backward-looking approach as opposed to a forward-looking approach. And it's diversified across the sectors. Or you could focus on free cash flow-oriented ETFs. And so your prior guest was talking about small caps. So Victory Shares has a free cash flow ETF, SFLO. Companies that have strong free cash flow are more likely to have the ability to buy back stock. And that's a way of playing the small cap buyback theme together in one trade.
Just lastly, while we have you here, we've also been discussing what potential tariffs or the added tariffs might look like for an inflationary picture here in the U.S. Is there an inflationary hedge ETF play that investors can consider as well?
So there's a handful of ETFs that have inflation in mind. One that I think of is PPI. Astoria is the asset manager behind that ETF, and it's a multi-asset approach. So it has exposure to gold. It has exposure to some of the sectors that can benefit from it. Horizon Kinetics has another ETF, INFL. That's another way of playing that. That's equity focused. There's an ETF or three for just about every investment idea.
Todd Rosenbluth, who is the TMX Verify Head of Research. Todd, great to see you. Thanks so much for taking the time.
Thank you.
We want to take a beat here from our personal finance coverage and turn to a few key market headlines that we're watching. Yahoo Finance's own Rochelle Kufo back with us and has the latest. Hey, Rochelle.
Hey, Brad. So I want to take a look at what we're seeing in terms of the broad markets here. We're seeing all three major indices solidly in the green. You're looking at the Dow now, currently up more than 1,300 points, edging towards 1,400. They're up more than 3.33% there. The S&P 500 also up more than 2% on the day. The Nasdaq, which was the laggard coming off the top, but now solidly they're up more than 2.3%, up more than 400 points on the day. Now, of course, we want to take a look at what else has been happening as we're about 2 hours into the trading day, still rallying after former President Trump's White House victory. Republicans also winning the Senate, while the House, of course, is still up for grabs. Now, since the top of the hour, Democrats have gained a House seat. It's now 181 for Democrats, 199 for Republicans, and 55 seats still uncalled. We're also taking a look at gold, watching it slip down over 2% today as investors move out of the safe haven and into riskier, quote, Trump trade assets. Now, the metal is still near record highs. Investors also have their eyes on tomorrow's Fed decision, of course, as a catalyst for gold's next move. And also in the red today are green energy stocks, part of the so-called Harris trade, plummeting in response to the vice president's loss. First Solar, Sunrun, Plug Power, and Enphase all down double digits so far this morning. And Meta also on the move today as the Supreme Court is set to hear an appeal from the tech giant. That's after a lower court decided to allow a securities fraud lawsuit to proceed. The suit, led by Amalgamated Bank, alleges that Facebook withheld information from investors about the 2015 data breach involving Cambridge Analytica. Now, the justices are expected to rule by the end of June, Brad.
All right, Rochelle, thank you so much for that roundup. Appreciate it. Viewers can get more of Rochelle on her podcast, Capital Gains. New episodes out every Friday, 12 p.m. Eastern, across all podcast platforms. Coming up, a second term for President-elect Trump is expected to have a major impact on the electric vehicle market. We'll dive into that next on Wealth. Shares of Tesla are soaring today as many investors bet a Donald Trump presidency will benefit Tesla CEO Elon Musk, who has been a big backer of the former president. Here to react, we've got Carl Brower, executive analyst at ICCars.com. Carl, good to have you back here with us, and thanks for taking the time here. You know, as we're thinking about the people that have annexed themselves to a campaign, perhaps none more so than Tesla co-founder and CEO Elon Musk, what does this ultimately net out for Tesla?
Well, it's interesting because we know that there's a lot of government help or incentive or regulation all pushing the electric vehicle transition. And Tesla's absolutely benefited from that. But we also know that Donald Trump doesn't necessarily support that thinking. You know, he's not big, he backed out of the Paris Accords. He's not necessarily a big supporter of the concept of a government-led transition to EVs. And if you look at some of the other electric vehicle stocks like Rivian and Lucid, they're not doing so well. So it's interesting to see that people feel like Elon's relationship with Donald Trump will overcome a potential shift in policy, because I do think the EPA regulations and expectations for electric vehicle sales and market share are not realistic. There's a disconnect between what the government wants to have happen, the current policy wants to have happen in the next 10 years, and what seems to be happening in the actual marketplace. And I expect we're going to see a reassessment and likely rollback of those requirements, which should be somewhat negative for all the electric vehicle companies to not have that kind of government support, including Tesla.
You know, as I'm taking a look at a note from Wedbush and analyst Dan Ives over there, who a good friend of the show, you know, one of the things that he mentioned is a Trump win being good for Tesla and Musk here. But then you ultimately think about what this means for some of the major investments that Tesla has made as well. Full self-driving, AI, you know, how does this all pass through in the relationship between Trump and what he's prioritized versus what Tesla has prioritized and communicated to their investors and analysts that they're going to be spending billions of dollars on?
Well, that's the interesting thing, again, is that I think Elon has realized that he's not going to long-term make his fortune or grow his fortune in electric vehicle sales. He really needs to find the next big thing. And whether it's robotaxi or personal robots, he's put a lot of time and energy and resources and investment into those technologies. And how long it's going to take to get there remains a big question. You know, Mercedes is further along. They've got consumer available self-driving at level 3 capabilities, and they're the only ones out there. And, you know, companies like Google are much further along with their self-driving efforts in terms of regulations. So Tesla's behind the 8 ball on this. He talks a big game, but he's still got to get through all the regulation once the technology is ready, and it doesn't seem to be quite ready yet either. Same thing with personal robots. Now, will Trump be supportive of those technologies more so than the previous administration? Probably. I don't think the previous administration was a growing fan of Elon. So he may be able to get some help and have an ally in the White House to help him get to that next level beyond electric vehicle sales. And maybe that's among the things that investors are hoping for.
What about the auto industry as a whole? What does the Trump presidency mean for automotives?
Well, I think, again, the traditional automakers have been trying to navigate this nearly impossible task between keeping government regulations happy and meeting those and keeping their customers happy and selling them the cars they want. And, you know, you look at someone like Volkswagen, who's made some pretty astounding comments in the past week about potentially closing home plants in Germany, which they've never done in the history of the company, simply because they're having financial challenges. And a lot of these traditional automakers, they're investing in EVs because they feel like they have to, but they're not seeing financial returns, and they're not sure how long it's going to take to get profitable in this area. So a Trump presidency and a reduction in those requirements overall is a good thing for the automakers, the traditional automakers. It's going to free up their ability to have a wider path between keeping government happy and keeping their customers happy. Right now, they don't really have a realistic path, in my opinion.
Carl Brower of ICCars.com, executive analyst over there. Carl, always a pleasure to get some of your insights, and thanks so much for taking the time.
Thank you.
Turning now to another key policy agenda for President-elect Donald Trump, tariffs. During his campaign, Trump vowing to set a 60% tariff on Chinese imports and a 10 to 20% tariff on imports from everywhere else. So what could this mean for your money? Our very own Akiko Fujita has more.
Brad, the expectation is that Trump will boost inflation, and that's been reflected in the swings we have seen in the bond market today, particularly on the longer end of the curve. Donald Trump has talked about tariffs, as you mentioned, as a solution to a string of problems, also saying during his campaign that tariffs would be a key source of revenue to pay for his agenda. Now, that could lead to a serious dent for average Americans. Trump has repeatedly promised to add universal 20% tariffs on all goods imported into the U.S., 60% tax on goods coming in from China, and we're talking about more than $3 trillion worth of goods being slapped with tariffs. The Peterson Institute for International Economics estimates those tariffs alone would cost the typical American household over $2,600 a year. Another study by the Yale Budget Lab puts that estimate even higher, saying Trump's proposed tariffs would add anywhere from $1,900 to $7,600 per household annually. And when you put it simply, the 1060 or potentially the 2060 tariffs on those goods would lift U.S. tariffs to their highest levels since the 1930s, at least according to the Wall Street Journal. That is expected to have wide implications on everyday goods when you consider just how much is imported from China alone. Morgan Stanley, in its report ahead of the election results, saying Trump's plan would raise consumer prices by nearly a percentage point. And it's important to note all of this is a baseline based on what we have heard from the now president-elect. The reason why tariffs loom so large in terms of potential impact to the economy is because this is policy that the White House can set without asking for Congress's approval. Now, the question is, how much of this is policy that will be implemented? How much of this is a negotiating ploy? And we've learned that from the former president's first 4 years in office. He likes to use tariffs as a tool. Goldman Sachs economists in the camp saying they don't see a 60% tax on goods coming in from China, but 20%. And in that scenario, core inflation would be closer to 2.3% in a year, lessening the blow to average Americans, Brad.
All right, Akiko, thanks so much for the breakdown. Appreciate that. We've got much more on wealth after the break, everyone. Stay tuned. You're watching Yahoo Finance. Approaching the midday marker on the day, let's take a look at the market action right now. First, taking a look at the major averages rallying off of the former President Trump's victory in the 2024 presidential election and his bid for the White House here. We're seeing the Dow Jones Industrial Average rising by about 3% as of right now. The Nasdaq Composite, that too is higher for the tech-heavy average by about 2.4%. We'll come back to some key components and names within tech and themes that may be playing out in your portfolio as well. The S&P 500, you're taking a look at that, up by about 2% right now. Also want to take a look at yields to see where we're seeing some movement there. First, we'll start with the 10-year note. You're seeing that ultimately right now higher by just about 4% on the day. 4.46 is what we're seeing that hover around, and then the 30-year sitting at about 4.65. Also want to take a look at Bitcoin here, as we've been seeing that hit new all-time highs here. Of course, Trump had been seen as one of the most crypto-friendly names in the election, and taking a look at Bitcoin, it's off of that 75,000 marker that we moved above, but still holding within that ballpark and sitting at about $74,232 right now. Also just want to ride out with a quick look at some of those Nasdaq tech names, mega cap tech stocks moving higher on the day. That's it for Wealth. I'm Brad Smith. Thanks so much for watching. Stay tuned for Market Domination with Julie Hyman and Josh Lipton. That comes up 3 p.m. Eastern Time.